Okay, let us start. Okay, so if the others to join, they can even uh, see the recorded version, right? Okay, so we are going to look at current international transactions. So we uh, uh, previous sessions we tried most of the provision in the Foreign Exchange Act. There are certain provision which we couldn't cover. That all that provisions are covered in today's session. So today would be the last session of this particular whatever the course that you are following, probably the last session, right? So let us look at the objective of the end of the session. You should be in a position to know what is the nature of the current transaction. What do you understand by current transaction, right? So you would have seen when we study all the foreign currency account, current transactions are permitted. Even out of rupee account, if you anybody want to do a current transaction, all are permitted, including all foreign currency account. You can effect any current transaction. So we should know what is called current transaction. Then permitted current transaction. So there is a list of permitted current transaction. So central bank has issued a direction listing all the possible current transaction, but that list is not an exclusive list. Somebody can argue and say my whatever the particular transaction by nature it's a current, it's not listed. Doesn't mean that is an exclusive list, because you can't incorporate all kind of transaction into one list. So they are given a probable list in the direction, giving the guideline what is treated as a current transaction, and the all possible transactions are listed in the direction. So you can't read that as an exclusive and say my transaction is not there. No, even it is not there, if meeting all the other criteria, you can still consider that as a current transaction, right? Then effecting payment. So for us to do the payment, we need to have the supportive documents and the required information. So remember, when you are doing any current transaction, we are going to see what type of documents is required. As a bank, as authorized dealer, we should be satisfied with the supportive document and the information provided by the customer. If the information is lacking, if the documentary evidence are not very precise, not very clear, then we should have we should have requested the customer to provide more information and provide supportive document. In the event if he is unable, then bank has all the right to politely decline the transaction. So always remember that right bank has. Of course, as I told in the Foreign Exchange Act, there is a provision if you are declining a transaction, if the customer demands, he wants a letter from the authorized dealer, why the authorized dealer is unable to do the transaction, the bank has to give a letter informing due to whatever lacking information or due to non-supportive document submitted, we are unable to execute the transaction. A simple letter will suffice. Then the customer has the time to take it up with central bank to get their ruling whether the transaction can be proceeded, or central bank also might requested him to submit more documents. Then the central bank will decide whether it could be done, or central bank point blankly say this cannot be done. So that is how the transaction will be decided whether to proceed or not to proceed, right? Then we are also going to look at some of the permitted current transaction, which we are already seen IIA, OIA, and we are going to see what is left over. Anything that we are not discussed, we will also go through the capital transaction. Then regulation pertain to issuance of international bank guarantees. Yes, there are bank guarantees we learn, but this is regulation pertaining to bank guarantee, because when somebody comes and say I want to issue a guarantee, you should know whether this particular request can be accommodated by looking at the regulation issued specifically for guarantees, right? And that is also treated as a, some of the guarantees are treated as a capital in nature. So let us look at those guarantees also. Then special foreign currency accounts open for specific purposes. There are specific purposes. There are few accounts are open, namely special foreign currency account, senior foreign national account. Then we also have a resident guest scheme account. Resident guest scheme special accounts are there. These are exclusively for particular purposes, right? So which we will have to go through. Then the other key area, electronic fund transfer card, which is a debit card and the credit card or any other device, you can preload it. Those are called electronic fund transfer card, EFTC card, right? So let us go through that and probably we will see its usage and importance, right? So this is our covering area today, right? So current transaction. So for us to have a basic idea, what is current transaction? If you briefly, somebody asking you, what is current transaction? If you say any transaction related to goods or services considered as current, supported by documentary evidence. So any transaction related to goods or services, but that should not be when you are doing a payment, that goods or services should not be linked to any transfer of assets. So if there is no involvement of assets, any transaction without involvement of transferring capital assets, it could be financial asset, it could be real asset, without involvement of any assets, movement of assets, all the transaction could be treated as a current transaction. So when I say goods or services, yeah, you can import goods, you can export goods, any commodity, any merchandise, you can buy services, you can sell services, all that are current transaction, right? So what is in capital when you make an investment, right? When you are buying a shares of other company, you are making investment. It's in capital in nature. It's a large amount, longer period, substantial amount involved. It's the investment is going to be have a long time duration. So the current transaction durations are very short, generally within a year or two maximum, right? So these are considered as a current transaction. So if you do accounting, the current assets, current liability. What does current asset mean? The asset that could be rotated within a calendar year, that is current asset. So same theory, not really in that sense, but is a current mean it's a permitted transaction related to goods and services. But here, as per the direction, there are four categories. Payment connected with foreign trade. This is what I've said. Any trade, import or export, foreign trade. Other current businesses, any businesses, you are buying services, you are selling services, including services, and short-term banking and credit facility. You open a letter of credit, you open a collection bill, you open a DP, you negotiate bill. All the trade what we learn, everything comes as a current transaction. So simply all transaction what we discuss in all these sections, except the investment, other than the investment, all are considered as current. Opening a PFC account, opening a BFC account, all that are current, because you do day-to-day activities, right? You earn foreign exchange by selling goods or services, right? So all that considered as a current. Then the second, payment due, interest on loan and interest income. So if you feel somebody making an investment in you, you need to pay the return, you need to pay the income, you need to pay the, if you are taken a loan, you need to pay the interest. That interest and the income you need to pay or receive are considered as current income, current transaction. So the income, interest, all that's the investment will not considered as a current. Investment is a capital in nature, but the return, that what you pay as a interest or net profit or before profit, all that comes as a current transaction. So what is current. So all without involvement of investment could be treated as a current, right? Then payment of moderate amount of amortization of loans or depreciation. Yeah, you are permitted to make investment outside Sri Lanka as a OIA, and foreigners are permitted investment into Sri Lanka IIA. We learn this IIA, OIA. So when you make an investment, and when there is a loan taken which has been amortized, mean you divided into the tenor of period and you pay. So when you pay interest, when you pay amortized loan, when you made an investment, there is a depreciation. You need to pay some substantial amount to cover that. Those are considered as payment of moderate amount. Moderate amount. So this is the word called moderate amount, which they interpret as a current transaction, not in terms of investment, but in terms of whatever you borrowed or lend in the form of a loan. Because we can lend as a bank, we can lend loans, and as a customer they borrow loans from overseas a lender, right? They need to pay. So likewise, the people are permitted to exchange a loan, and there is an interest payment involved. There could be amortization where the loan will be divided into the maturity period and you pay, and there will be interest component involved. So those are considered as a current transaction. payment for moderate remittance of family living expenses. Yes, family living means if a person if I give you an example, let's say example the Indian doctor. I have been giving this example right through these sessions. Working in Lanka hospital, want to remit money. Is on a resident visa. He want to make payment to his dependent because their family is in India. So those are living expenses, right? And even a Sri Lankan can send their children and they're studying. You need to look after the expenses, right? So those are living expenses, family maintenance. So these are current transaction. That is not in capital because these two day to day you have to survive. For that there is a remittances can be. So there are inward remittances coming into the country. You know, a lot of Sri Lankan workers are remitting money. Those are remittances. That when you say current transaction, don't think only payment, receipt, both. Current transaction mean don't think only sending payment out of Sri Lanka. No, receiving payment to Sri Lanka also current. So say there are a lot of repatriated workers. They are working in Middle East. They are sending money to the country. When they are sending money, it considered as a inward remittances. When the inward remittances are coming into the country, it's current. So likewise, the funds can go out as a remittance to meet the incidental expenses of the dependent or the immediate family member, all treated as a current. So you know what is current transaction now, right? So according to a regulation, central banks, these directions, they are given. Banks are intermediary to support the current transactions. So there are two people, they have to carry out the transaction. So the authorized dealer, he comes as a facilitator to make the payment between these two people, right? So a person in resident in Sri Lanka engage in current, yeah, you a person in or resident in Sri Lanka may engage in current transaction. As I told you, anybody who is here, they are on a resident visa, right? Or you and me are, we are residing here. So we person in, we all person in or resident in, somebody with a resident visa will be treated as a resident in. So everybody, you and me, all are person in. And there are people who can have a resident visa, they are in. So all these people are permitted to effect current transaction, right? That's what I give an example. You and me, you and me, you and me remitting money, you and me remitting money to others. There is no need to prove because we are permitted. We are Sri Lanka. But when there is a foreigner with a resident visa, definitely he has to show the residency. Then he's a resident in, so he is also eligible to make payment. So that is including spouse, children, parents. So you can make a payment for immediate on behalf of immediate family member, right? Conversion into Sri Lanka rupee or vice versa. I mean, when you are receiving payment, you receive dollar, you have to convert into rupee. Vice versa, I mean opposite. So when you are convert Sri Lanka rupee and foreign currency, you sending out. When you are receiving, it's vice versa. You are getting dollars, you convert into rupee. Right? Both are possible current transaction. In assessing the bona fide mean what do you understand by this word bona fide, or maybe you can pronounce as a bona fide. Bona fide is the real, authentic, right? In real terms, what is the actual. So you need to see the genuinity of the transaction. So in assessing bona fide mean, you need to know the genuinity of the transaction. So by going through the documentary evidence, you need to verify, right? So always remember, when you do current transaction, it's very paramount important to verifying the document before you say okay to the transaction. By only way to to interpret or to judge a particular transaction which is current is really required documentary evidence. So we will have some example when you practical requests that you receive also we will be discussing in this session, so you know at a better clear understanding why do you want documentary evidence. With the documentary evidence only you will verify with this is a current transaction, right? If somebody come and say I want to remit money $50,000, I have invoice. So it doesn't mean you are permitted to do that. You need to verify whether this could be interpreted within the given current transaction, whether you can put this particular request out into that. For you to do that, you really require certain document for you to arrive This is also one of the permitted transaction. That is the reason document evidence is very important when you do current transaction. Sometimes when you go to bank asks lot of documents. Why? They need to verify, because later on if the transaction found to be fraudulent or intentionally they want to cheat the bank and deceive the bank and send the remittances, and later it's found the bank also made a mistake by allowing this transaction, then bank is guilty. So you need to ensure bank is not in guilty. Bank has taken the maximum precautions and by obtaining documentary evidence. If you are not sure, always it's better to decline the transaction politely if you are not sure. So make sure that you are aware what is this transaction. So some of the incidents I have seen in my experience, people have done wrong transaction which is not permitted, then they will find it difficult to get away, because there could be query why this is permitted, because you need to know whether this is a permitted or not by going through the document. Very very important, right? So you need to have the document evidence. uh, yes. AD shall retain any information. Yes, you know this, right? There is a 6 years period. You banks should have all the transaction. There could be transaction beyond that period. This we call prescription ordinance. You need to have uh, 6 years minimum. 6 years you need to keep the record. But there are investment. I think in previous session we learned some outward investment when you make. Until the investment realize, you need to have the documentary evidence. So you need to find a way out. Whenever you do transaction, you need to keep all the records. Bank may have to do some electronically keep this record. Otherwise, if you try to keep physical form, one is costly, other one is space problem. You might have a space problem, costly, and the damage of those records, photocopy or whatever, fax or whatever. There are certain period you can retain these records. So beyond certain period, those printed carbon or whatever figures might disfigure, then you won't be able to see. It's better that electronically forms are used to keep this requirement fulfilled, right? Record keeping. This is to keep all the record. In the event of some query come, you need to pull out the document and show the regulator we have done within the guideline, and this is the documentary proof, right? So that purpose you need to have. So these are something that you need to know when you do current transaction. These are regulation, right? You need to have the documentary evidence. You need to keep the record keeping, right? You have to verify, right? So we are going to look at some of the current transaction, which is practical. You will come across in your day-to-day activities when you're working in a bank. There are people coming for travel. There are people coming for education. There are people coming for medical treatment. Then all others, membership, freight charges, license fee, professional fee, other permitted services, all that are current transaction. But these all are related to service. That is what you get, service payment, right? These are all related to service, right? There is no tangible movement of goods or travel. You go and take a money and come back. Education, you are studying. Medical, you go for a treatment. Not like importing a vehicle, exporting a tea. You can see the commodity. So those are commodity. Even that is considered as a current transaction, right? That's what we say, goods or services. But here we are only focusing services. All payment related to services. So this is what, when you're working in a bank, people comes to you, I want to do this payment, I want to make this payment. Then whether you need to find out whether is it possible. If so, what are the precautions, what are the document evidence to be taken, what are the information to be obtained from the customer. These are the pre-request requirement when you execute this kind of a current international transaction. Let us look at travel. So you can see travel. Travel could be holiday or business visit. Okay. So somebody can walking into your branch and say he is traveling. So now see, he is traveling. Then he wants to carry some foreign currency notes. So he is asking you, can I get 3,000 US dollar? I am going to Malaysia for a business trip, or I am going for a leisure trip with my family, my wife and two children. So I want $10,000. So whenever there are requests coming, somebody traveling, right? Can be business, can be holiday, can be leisure, whatever, pilgrimage or whatever, right? That is a visit. Then you should know, okay, how much we can release as a currency note maximum. There is a limit. Currently, maximum currency note you could issue is US dollar 5,000 or its equivalent in any other currencies. So you can, for travel, you can issue foreign currency notes. Foreign currency notes, foreign currency 5,000 or equivalent. These are currency notes. So remember, this is currency notes. What are the requirements? So the requirement is they should come with their passport. Where if they travel to certain country, you need to take the visa. So you have to look at the visa. You have to look at their passport, whether the passport is expired or passport has a validity. They are traveling, they got the visa to travel. Then you have to look at the return air ticket. Return air ticket is very important. So I have seen some people making mistakes by whenever somebody coming in, walking into banks and asking for foreign exchange. The understanding of return air ticket is important, because return air ticket meaning if somebody traveling, when you are taking a return air ticket, what do you understand by return air ticket? That means if somebody leaving Colombo to, let's say, is going to Tokyo for a business visit and coming back to Colombo. So you can see the journey start from Colombo, the journey end also in Colombo. So that is you call return air ticket. So you should know when it return air ticket, what do you mean by return air ticket? The journey should start from Colombo, it should end from Colombo. So the ticket should be Colombo to Tokyo, back to Tokyo to Colombo. This is return air ticket. If somebody going from Colombo to Tokyo without return air ticket, you can't release foreign exchange under travel. So this is what you learn. So you require return air ticket. Somebody cannot go on open air ticket and say, I am not coming back. We don't know on what purpose he's going. If somebody is going, we should know he's coming back. That is what you ask for a return air ticket, because these are travel. So you know these people has to come back to the country for a shorter visit. These are travel, right? So based on that, you need to decide. So what are the, you can see you require passport. Of course, if the visa is there, they should have embossed in the passport. If the visa, some people are, some country when you visit, there is visa no required. If you go to Singapore, it's arrival visa. So Singapore, anybody can go to Singapore without obtaining visa. Certain country, most of the country, you have to take a visa prior to leave the country. You have to get a visa. That is what you need to have these embassies and all set up, ambassador, embassy and all there for you to know. If you want to go to India, you have to go to Indian High Commission to get your visa. They give visa, whether you are traveling to India, what purpose. There's a form. If you fill, and if they justify the reason what you are given for traveling to India, they might give you permission. Mostly they will give permission, everybody, because it is an income to their country, right? So likewise, every country will permit, but you need to know whether the visa is taken. So, and you release foreign exchange. So when you are releasing foreign exchange, you know currency notes should be maximum 5,000. In Sri Lanka, remember, when you are releasing foreign exchange, you need to endorse it in the passport. So you should know, whenever you release foreign exchange, you need to endorse it in the traveler's passport, how much you release, because that is the requirement, right? So that doesn't mean if somebody carrying, now, so I'll give you an example. Let's say one time Sri Lankan now is holding a Canadian passport, and he comes to you, right? And he say, I'm a Sri Lankan, right? But when you ask the passport, he gives the Canadian passport. So you can see he's a Sri Lankan, he's talking Sri Lankan language, but he's giving a Canadian passport, and he says he's going back to Toronto. Now he's asking for an exchange. So you should know whether I can give this release foreign exchange for this particular person. No, you can't. Because first of all, he's not a Sri Lankan. Though he says he's a one-time Sri Lankan, yes, but you release foreign exchange for Sri Lankan passport holders. You don't release foreign exchange for Canadian passport holder, though he's one-time Sri Lankan. No, you can't. It's not meeting the requirement. Here the Sri Lankan, you have to have the Sri Lankan passport. So you should understand. And also you remember, it's a one-way ticket. He's saying he's going back to Colombo to Toronto, not coming back. So you can't release. He's not a Sri Lankan first place. Then there could be question. You might say, I am a dual. That kind of a request. I mean, this is where you have to be very smart enough to identify and whether you have to explain to the customer, sorry, we are unable to give you. If we can give it under these conditions, right? So from rupee, you can't convert and give it to anybody. Though that person says he's a dual, we need to check whether he's a resident, remain here for some time, and he's going to with a return article to a country and coming back. We may consider differently. If somebody says I am a dual and he just come here and he's going back to his own country with a one-way ticket, there is a different treatment. So you need to know on what duration and what purposes and what visa is on there. So this is what required. Now you have understanding. Okay, we release foreign exchange for travel purpose for Sri Lankans who are traveling abroad with a return article, and there should be a visa to be obtained. If there is a requirement prior to travel, you need to obtain visa. They have to obtain visa. So these are the requirements you look at when somebody traveling. And also remember, it doesn't mean that when central bank says a maximum issuance of $5,000, doesn't mean everybody come and demand, I want $5,000. No, the bank can use their discretion. The bank can use their judgment by looking at the request, whether the 5,000 is really required. So it doesn't mean maximum the central bank say 5,000. It doesn't mean you have to give it to everybody 5,000. No. If somebody going to India for 2 days, you might give a lesser amount. If somebody going for Singapore for a business visit, you might give a little more. So request to request, it varies. So that is where you need to, as a banker, you need to exercise your due diligence. This is what we learn. So as a banker, when you get a request of this nature, you should know, okay, if a businessman coming to you and he says, I'm going to India, I'm going for India 2 days, I want $5,000. So that is one request. There is a doctor who is going for a seminar to Malaysia for 5 days, he is asking 5,000. Now you should know for which request. There are two requests. How do we look at both requests? Is it a both requests has the same weightage? Definitely no. Because one by nature is a businessman, right? You know the profession, right? And he has so many other business terms. We learned that when you're doing a business, there are payment terms, LC, DP, DA. So when he's a businessman, when he's going to a particular country, he can use those payment terms. He has to take the travel elements to meet the incidental expenses, not to do business, right? He can't do it also, right? So he can't take the travel allowance and go and do business. No, he can't. Travel allowances are given to meet the incidental expenses, including accommodation, your food and lodge purchases, personal requirement, everything meets the travel allowance. So if a person going for India for 2 days asking 5,000 and the doctor going for a seminar to Malaysia for 5 days for 5,000, I would say I would give 5,000 to doctor. Because by profession is the doctor is going to Malaysia for official purpose, for a seminar. And there could be status. He's a doctor by profession, his cost of living may be high. So giving 5,000 to doctor could be justified. Even if he asks more, then you may ask him to carry some travel card and or whatever he can. But 2 days to India, a business person by nature, if you look at the passport, you would have seen every pages are endorsed. He is a multi-traveler. He has a multiple visa to go. So you should not treat the same way what you treat the doctor and the Indian business traveler, the Sri Lankan business traveler who frequently go to India. So look at two scenarios and use your judgmental. Okay, a business person is meet incidental expenses where he's traveling to India. So you need to look at the duration, 2 days and the 5 days. And country, India, Malaysia, travel cost of living may be little different by nature of the person, businessman, doctor. So you have to look at all these things and decide whether so much amount can be given, so much. There is no hard and fast rule per day you can give. No, it is the judgmental through your experience. You have to justify whether the amount could be justified, right? So if I support you by experience to you to know, if you want to know some information, Let's say if a frequent traveler, a businessman come and say, I'm going to India for 1 month. So when you say 2 days, you are reluctant to give 5,000. So you are giving only $3,000. Now next month he comes and tells you that he's going to India. This time he's going for 1 month. Somehow or other you got to know that you are looking at the duration, and based on that you are giving foreign exchange, right? So the businessman who goes to India for 2 days, he come back and say, I have a return air ticket for 1 month. I will come within 1 month time. So he's asking more. So you are going to give him 5,000. But if the same person coming again and again, you have the mechanism to identify this person. Look at the date of departure and the date of arrival, and strictly see whether he stayed in India for 1 month. If you really look at it, sometime he would have come within 1 week. Though he told you that he's going to stay 1 month, he has taken $5,000, but he actually stayed for 1 week. So you need to be identify these people. This is where you have, when somebody coming frequent traveler, look at what is the departure, what is the arrival. Rubber stamps are there. Whenever departure, there is a immigration rubber stamp in the passport. You can look at the date, arrival date. Then you know how many days he spent, how much foreign exchange you are given. Whether is it a practice of taking more and spending lesser time and coming by this businessman, then you are also supporting him. So that is where you have to use your due diligence, your experience, right? That's important. Okay, so that is about travel. Education, yeah, there is other requests you frequently get it from parents coming to you or guardian coming to you and wants to remit money for education purposes. When somebody migrating, now a lot of people are going to Australia and Canada and UK for education purposes. So you might get a query. If you are working in a bank, you might get a query from your relative or from your friends. There is a request, I need to go to Canada for a particular course. How do I get my foreign exchange? Can you help me as a banker? Then you should be in a position to guide them correctly. Okay, so what is the requirement? Yeah, education is a permitted. It's a current transaction. First of all, you identify education is a current transaction. Yes, payment can be made, no problem. There is no question about it, right? So what is the document evidence? What are the documents required? You logically think if somebody is studying, saying he is studying, then how do the bank know actually he is studying? There could be offer letter, enrollment letter, or a confirmation letter from the education institution. It can be university, it can be college, it can be any other institution. There could be letter, confirmation letter, this particular student has been enrolled for this particular course for a degree program. So there is a confirmation of letter, that is you call offer letter, that should be given to you. Then you look at the offer letter, then you proceed. Okay, whether have you got the visa to travel, student visa. It's a different class of visa, not as a travel. It's a student visa. So you know the student going to be study for 3 years. Then you can't ask return air ticket. It has to be definitely one-way ticket. So now you know the reference. You can't ask the return air ticket for a person who are going for education. You can ask that for a traveler, business trip or a official trip or a entertainment trip or a pilgrimage. But for education, it's a lengthy period, 3-4 years. But still you can release foreign exchange because it's education service. But you need to know the supportive documents. So you get the offer letter, you get the student visa, then you go through the documents and you decide, okay, cost of living, course fee can be remittable. Semester by semester you can remit. Semester mean generally half a year, maybe 15 to 18 weeks, considered as a semester. So each semester you need to remit money, right? So the question is, when somebody comes giving all this information, you should understand, when somebody coming to make a payment for 3-year degree program, every 6 months they want to remit money, right? But as a logically think, is it correct every time you ask the same documentary evidence when they visit you every 6 months? Say the course is running up to 3 years. They come here for first 6 months, they paid. And the 7th month, when they are coming for the second semester, you are asking again the documentary evidence. So that is the reason on the top you can say separate file to be maintained. it is recommended, there's no hard and fast rule. It is recommended to maintain a separate file, because these are payment you are going to continuously make for some time. Therefore, it's better to maintain a separate file. So you maintain a separate file, education file, write the student name and the identity card on the top of the file, and keep the supporting document inside the file. Confirmation letter, offer letter. Then you look at the student visa, copy of the student visa, copy of the passport where the photograph and the personal details of the student appears in the passport. Take a copy of that and put it in the file. Then you know all the supportive documents are now in the file. Then you know the course is running from 2021 to 24. 4 years it's running up to, or 5 years. So 21 to 25, this degree program, 4 to 5 years, right? So you know up to this offer letter is valid. So the offer letter mentioned the course fee, so much can be remittable, right? That is there. And the student visa is there, right? Now you open the file. So whenever a guardian make a request, you can effect the payment now. When you are effecting the payment, remember, you need to make a record. You have to maintain a record in the file itself. Jot down, make a record mean in the offer letter or the photocopy. If you keep a copy on the offer letter on the side of the file, make some recordings. Put the date when you are remitting payments. What is the date you are remitted? How much you are remitted? For what purposes? And whose favor? Let's say you are remitted 5th of January, $10,000 to university as a course fee. Again, for the same student, after 1 month time, you are remitted in February, $3,000 cost of living in favor of the student. So you write this information: date, amount, what purpose, who is the beneficiary. If you make the payment to university, it has to be course fee. If you're making a cost of living, it can be sent to direct to the student name. So these are the information you write in the file, so that you will have a track record how much you are remitted in favor of the student, how much you remitted in favor of the university. So this is how you maintain, because what happens if you keep the file, when they come next time, you know this person has already had a file with you. So that file you can continue to remit. You need not to ask any documentary evidence. Unless they follow that particular course is over, now they are going for master. Degree over, they are going for master. So then you get a new offer letter for the master. And in the meantime, see the student visa is extended. Sometimes student visa given for 3 years, then the master program, he has got the visa extended. Get the copy of that also. Remember, your document in the file should be validated. You have to have a valid document. You can't make the payment for masters where the student visa is over for the degree program, and you don't have a student visa to remit money for the master. So you need to update your file. The documents that are in are updated. Can't be obsolete, right? There's no point. If the records are obsolete, there's no way that you can remit money. It is better that you not maintain a file, right? So if you are maintaining a file, it should have all the validated documents, right? So this is what you do. Make a payment for student, right? The one important point here you need to understand: when you are making for course fee or the payment to the institution, it has to go direct to the college. The course fee cannot be remittable to the student. Remember, right? The student, you can remit the cost of living. You might open a bank account, you can send it to the bank account for its cost of living, right? The course fee has to go to the college account. You can't send the money to the student account. The course fee cannot be sent to the student account. The reason is simple, right? We don't know whether he will make this payment to the college. We don't know what is he going to do with the money. If you send it to the college, we know it has sent to the university. It is so when the offer letter says so much to be payable to the university, the payment has to be made to the university or the educational institution, not to the student. Student, you can remit the cost of living. So understand? So this is how you maintain a documentary evidence, a separate file when you are doing education payment for a student, right? So you need to know the basic requirement, right? I have given a sample, an offer letter. So there is a institution. they are given to a student, and they are given the direct cost, indirect cost, so much. Tuition fee 38,000, the other fee 370. Room and meals they are given. Then books and supplies. Some offer letter may have all the details. Some offer letter might only have cost of the course fee for the full year, for the academic year. Then the cost of living may not there. Still you can remit money, because why the offer letter might have all the details or might not have these details, there is a difference, because there is a reason. Because when you make a request, when you are applying for a particular course, you will be saying that you will be staying in the hostel premises in the university. Then when they give you offer letter, they might give you the accommodation fee and the food and lodging, everything they might incorporate in the letter. If you intended to stay in the college premises or the hostel of the university. If you have say, no, I am only want the course fee, I am intend to stay outside the university, then it's not relevant to mention that. So there can be situation you would have got offer letter just to mention only the course fee, nothing about the cost of living. So you might ask the question, if a person comes with a letter, such letter, can as a bank can we remit the cost of living? Yes, you can, because as far as you know, you have the offer letter, you have the student visa, you know the particular person is studying there. It's a matter of fact that he has not mentioned or he has indicated that he is not staying in the hostel. The university has not mentioned the cost of living. But still, if you request the guardian or the parent, ask the student to get a letter, a general letter from the university, approximately cost of living is how much, that could be sufficient. Or in the event of when there is no document or the university do not issue a letter of that nature, even you can find out from the internet how much cost of living in Australia for an overseas student per year. You know roughly how much, right? So based on that, you can remit money. So there are way to get this information. Nowadays, everything linked, everything online, informations are on with a click of a button, you have all the information. So it's not a big deal to get this information. Those days, yes, you need to get a letter from the university to find out approximately cost of living in that country, because there is no access to this information data. So you may require. Now currently, it's better that you get the letter from the university to mention for an estimated cost, though it's not relevant to the student directly. They will issue a letter. If you keep the letter in the file, then you are perfectly all right. If you don't have the letter, still you have remitted based on the offer letter, but the cost of living, you have a justification how much a student is required to stay in a country for a calendar year. So when you are remitting course fee, remember there is a difference. When you are remitting course fee, you can remit the full amount course fee. The course fee remittable full amount is permitted. So you might ask, if offer letter says, for take example, this offer letter says total amount of 50,950, whether it is really required to remit. The question is, tuition fee 38,000 and the other fee can be remittable in full. But room, meals and accommodation and all, you really not required to remit in full, because the cost of living can be remittable semester by semester. There's no requirement for you to upfront remit the cost of living. But the course fee, yes, you can. Because what happens when you remit the course fee in full, sometime the university might grant some discount or offer some concession to the student. So there could be possible discount or whatever, because they got the payment for the full year upfront. So there could be concession given to the student that is indirectly benefit. So therefore, our banks, central banks allow remitting full amount of course fee is not an issue at all. You can remit because it can. But cost of living is generally not required to remit the whole thing at once. It's really not required, right? So mostly what happens in student case, some students are working part-time and they only want the parents to support the accommodation. food and all, they will. Even some student looking after accommodation and food. The parent only send the cost of for the cost for the course fee, not for the other expenses. Students, some smart student do that. If the student is not able to work and find, still accommodation and cost of living can be remittable. No, there is no issue, it's remittable. Of course, semester by semester it's possible, right? It's doable, it's a permitted, right? So right? Okay. Medical. This is the other request you might get it, where these people are going for a treatment, for medical treatment. So these are practical scenarios you will come across when you are working in the bank, when you do foreign exchange, or whether your bank might have a separate operation department might handle this, or a separate foreign trade desk must be there, or it could be handled by every branch are permitted to do. So depending on your setup, these are handled by respective people in the bank, but each staff should know what are the documents to be taken, what is the procedure, how to maintain the record. These should be known, right? So when somebody comes for medical treatment from overseas, right? So there again, now of course, with that with the hospitals here highly developed, and there is no need for go for overseas treatment. Of course, those days people used to go because we didn't have that facility. Now currently we have all that latest technologies are there. Doctors are studying in overseas and working here. Now we have that advantage of getting the treatment locally, but still there are certain diseases you need to, or sickness you need to go for overseas treatment if those services are not available in our country. So cases like that, there are requests maybe coming for this purpose, medical treatment in overseas, right? Mostly some people go to Singapore for a better treatment, or some are in Europe countries, some are go to even India Apollo. So these are medical treatment, you go for it, right? So when you go for medical treatment, still it's a permitted transaction, because medical is a part of your service. Education is cost, travel is cost, medical, these are your current transaction, right? These are permitted. So remember, whenever somebody come for travel, somebody come for education, somebody come for medical, all that are permitted. It's a matter of you are getting the right documents to verify this payment is going to genuinely for that purpose. That is what you use the word called bona fide, or bona fide. So the bona fide is to verify the authenticity, right? Okay. So in medical, what do you want? Yeah, you need to have the doctor's prescription. Why? Who asked the patient to go for overseas for a treatment? So there could be doctor's prescription, right? So the doctor's coming and giving a prescription. Okay, this student has to go. Sorry, this patient has to go for a treatment, right? So the doctor's prescription recommendation. This treatment is not available in Sri Lanka. He has to be taken to the overseas medical attention, right? So that's a doctor's prescription or diagnose card or whatever, right? Then try to get the estimate cost for the treatment, medical treatment. Even you can Google it and see nowadays, right? So estimated cost, you need to verify that. Then you need to decide the appropriate mode of foreign exchange. How do you release the foreign exchange when somebody going for travel, somebody going for medical treatment, right? Then you release a foreign exchange. So generally what happens when it comes to medical, if I give you an example, let's say parents, a father and mother, or the guardian has come to your bank and they say, we are taking our child to Apollo Hospital in India for a treatment, for a brain surgery. So which is not here. We don't have that equipment to do that. Okay, so doctor's recommendation, okay, child can be taken for the surgery. So the doctor's prescription is there. So you need to find out whether is there any possibility, how much is very difficult, how much the amount, roughly amount could be for the surgery. So they would have queried before they leave the country, they would have queried Lanka hospital, this kind of surgery, approximately how much will cost. If you know that, verify the amount, then releasing foreign exchange. So remember, here when you are releasing foreign exchange, you got to understand these are Sri Lankan going to other country, and they need to their cost of living also, because they are going to stay in a hotel or they are going to stay in a guest house. until the treatment is over. So the father, mother, sick child, all three are traveling. So you need to give a release of foreign exchange for travel purposes, at least $5,000 maximum per person. All 3% you can release foreign exchange. Even a sick child is an infant, even he or she is entitled for the $5,000, because it's end of the day, it's a human being. It is not a minor major issue. It's a human being, the medical treatment. So you can release maximum currency note of 5,000 into 3 people, and the balance could be suggested. But that is what I said, most appropriate mode of foreign exchange, because I have learned some people have done wrong. I mean, some people have gone and issued a bank draft. This is, I'm referring about 10 years ago. For medical treatment, they issued a bank draft. So the poor people who don't, I mean, they didn't know anything about the banking, right? They also had taken the bank draft and gone to India. When they go there, when they want to admit the child, luckily they had money to admit the pay advance and remit the money. Then when the bill started accumulating, the hospital has asked them to make a payment. So they show the bank draft of $5,000. They say, no, we won't accept bank draft. So you need to understand, when you are making payment remittances, there are different mode. Currencies, notes you can give, travel card you can give, you can do outward TT, telegraphic transfer, you can issue a bank draft. These are different modes. But you need to understand a mode is more appropriate when it comes to medical. It is instant cash. It has to be physical cash, or it has to be equivalent of high liquid. High liquid liquidity should be very high in the form of a cash or in the form of immediate cash. So like debit card or credit card or travel card is the ideal mode to release, because you need to pay immediately, right? So that is the mode, right? So this is possible. There is no limit as such, if depending on the treatment. So sometime what happened, say, let's say, I'll give you an example. Let's say the child, the same example, the father, mother had taken the child to Indian hospital for a brain surgery. They have taken $20,000. The $20,000 include in their cost of living. They have paid about $15,000 to the treatment. Now the bill is going up again. Other 5,000 to be payable. Already they got the service. Now there is a bill outstanding from Lanka Hospital. So their guardian here can come to the bank and remit the money by way of a TT, because that cost is already they are given the service where 5,000 is already due. So that payment you can make a TT payment to the Lanka Hospital, because the payment is already, the equivalent of service is already given to the patient. So it's an outstanding bill. So TT can be done if there is any balance payable to the hospital. Without knowing the figure, you can't send a TT in advance, right? That is the reason I use the word most appropriate mode of foreign exchange to be used when it comes to medical treatment. So you understand this, right? So you know now, okay, we can issue for medical treatment. There is no problem. What is required is to know the diagnosis card, a prescription from the doctor, and make sure whether you know roughly approximately cost for the medical treatment. Then you release foreign exchange mostly on currency notes. You need to look at the guardian parents cost of living also, because they are going to the other country. You need to look at that also. You need to advise them, take the travel card, take the debit card, take the credit card. Don't issue draft, don't do TT payment. Those are not appropriate here. Unless the medical treatment is already given, there is a balance payable to the hospital, that amount is due for a number of days, then remitting TT by getting all the relevant documentary evidence, supportive information, documentary evidence, then remitting to the hospital account, bank account is okay, because you have the documentary evidence. You already remit money, the balance is payable now, right? So such kind of instance, you can do the outward TT fund transfer. If not, the right mode is the cash equivalent or immediate cash form devices like currency notes or travel card or electronic fund transfer card, EFTC, debit or credit card, right? So this is about the medical. So now we are moving on to the payment to other permitted services. So any other services. So now in that slide you have seen royalties, any other payment. So payment, anything other than that, any service related. If somebody comes in, you need to find out whether this kind of a transaction is permitted, because you know obtaining a service from foreign overseas service provider is permitted because you are getting a service, but you need to show the documentary evidence to the bank there is a service agreement entered between both of us. There is an amount payable, there is an invoice. So, and remember, in last 3 to 4 years or so, a tax clearance requirement is there from the Department of Inland Revenue issue a direction. Whenever service related payments are made, the customer has to get the tax clearance from Department of Inland Revenue to show that the amount that he remitting after paying due taxes. So that is what you call tax clearance, right? So every service related payment, these are not relevant for education, not relevant for your travel, not relevant for your medical. These are when you make a payment for service related. Say, if I give you an example, let's say you have entered a IT solution company in India to upgrade your software system. You have a computer system, they want to upgrade your software system. So the upgradation is given to a service provider in Mumbai. There is a service agreement for $25,000. So there is a service agreement, and now they have upgraded your software. Now they have raised the invoices for $25,000. So for you to remit that money, you have to go to Inland Revenue, get the tax clearance because this is a service related transaction and this is an official service agreement. So you need to get the tax clearance from Department Inland Revenue saying that the remit, whatever the money that you are, I mean, $25,000 equivalent is a fairly large amount. So you are remitting by converting your rupee amount. So these rupee amounts are after paying taxes. That is what the tax clearance is. You are making this payment after paying due taxes belongs to the government. Due to the government, you have made the payment. Now, after tax only, you are remitting this money. That is what the tax clearance is. When you are making a certain amount of generally larger sum of foreign exchange for a service related payment, you need to get the tax clearance certificate. That is to ensure you have paid taxes for the amount that you are convert and sending money, large amount. For that, you have already paid the taxes, for which you have to submit the tax clearance certificate. Then the bank will effect the payment. So you need to know a service agreement. Yeah, both parties should have service agreement. Once a service is offered, invoice will be released by the service provider to the service receiver. They said, okay, we have upgraded your software agreement after 2 years. So they entered a service agreement. They have installed all the software for which they have paid 10,000. In the service agreement, there is a clause every year. This service, this particular software need to be renewed. There should be payment to be made after software is upgraded. Every year, $25,000 to be made as per the agreement. So every agreement comes, you need to know, you need to get the invoice for $25,000 from the service provider saying, now we have upgraded the software during this calendar year, for which there is a 25,000 due, and the bank will ask the customer, okay, provide us the tax clearance, then you effect the payment. So these all payments are, so remember, any payment, if somebody comes to your bank or a company or a partnership or a business, or even for that matter, an individual coming to your bank and asking you to remit money to somebody unknown person in other country, you can't just close your eyes and remit money. You need to verify why is he remitting money. First of all, why is he remitting? What is the service offered by that particular person? Is there any agreement? Yes, there is an agreement. Get the copy. Okay, now is the service is already provided? Yes, there is an invoice raised by the service provider. Get the invoice. Now approach the inland, ask the customer to go to Inland Revenue, get the tax clearance, get the thing done. Then you remit the money. Then you are meeting all the mandatory requirements. Then your transaction is already perfect. So remember, when you are reporting, remember when you are converting rupee and remitting money, remember whether it's a travel or whether it's a medical, whether it's education or whether it's a service payment, there is something called sale of foreign exchange, Form 1. Right? There is a sale of foreign exchange, Form 1, to be reported to central bank. electronically those information filled. So there is a document filled by the customer, form 1. So that is the foreign exchange. He has to fill the form 1. That is you call sale of foreign exchange. So the form 1 need to be filled in addition to all these document, an additional document given by the bank to report the sale of foreign exchange to the central bank. There is a sale of foreign exchange. That document is called form 1, to be filled by the customer. That form has two sectors. One section will be filled by the customer, other section will be filled by the authorized dealer. The bank has to fill it and then say sending it to central bank. Probably now electronically you transmit the data, not physical forms are not required anymore, but you have to retain that record and then furnish the information to central bank. So these are all about the current transaction, right? So you know now service related payment, right? It's a travel or education, or it can be medical, it can be any other service payment. What you need to do, what are the documents to be taken, how the transaction need to be reported to central bank as a sale of foreign exchange, right? All that you got to understand, right? Okay. Then there are other type of current transaction which are also permitted, which as per the direction, these are also should be allowed transaction. So other type of current. So let us look at some of the current transaction, like commission and claims. Let's say, what do you mean by commission and claim? Let's say there is an exporter, who has been exporting, but for him to get that export order, there will be other foreign party instrumental in getting that order. So what happened? That agent, that particular company who have canvassed the business for you is claiming a commission. They say agent commission 1% of the contract value to be remitted to us. So that is how you entered with an agreement. So that amount is due to the agent because that guy. So let's say a Sri Lankan tea exporter exporting tea. There is a company in let's say Dubai assisting you to find a tea buyer for you. So he found a buyer in Bahrain, right? So the Bahrain buyer will buying tea from you. This contact came through to you through this Dubai agent. There is a Dubai company, which is an agency company. They connect supplier and the buyer. So they connect you to the buyer in Bahrain to buy your tea. So that agent wants some fee because they, by connecting, they are getting, in brokers are there in local business, agents are there. When you go for a house, rented house or buying an house, there is a broker, right? So there is a broker, there is an agent. Those people expecting a fee from you. So same way in trade, when you are exporter, when you want to have a potential buyer, you will get the assistance from a foreign expertise kind of agency firm. They will channel you some business to you, but they anticipate certain percentage as a commission. So those commission is remittable. So you need to show the documentary evidence whether you have an agreement with that particular agent, what are the export that you have done with that agent's assistant. If you show some documentary evidence, the bank can remit the money for the agent commission. Generally 1 to 2%, 3% is fine. If you done the export for $100,000, $1,000 can be remittable, or 1% or even 1 to 3% is remittable, right? There are businesses going up to 5%. That's okay as far as there is a documentary evidence to prove that there is a 5% agency commission claimed by the agent, right? So up to that percentage, because 5 is fairly large a value, because you need to look at it depends. Sometimes if you don't get the buyer, very difficult to get a buyer, the agent might jack up his commission and say, if you want a buyer, you need to pay 5%, but we find you a solid buyer. Then every time when you export, but remember, every time when you export, you need to pay them. It is not a once payment. You have to pay agency commission for every order they get to you. So that is how they entered with. Every order you do it, you need to pay 2% or 3% commission, right? So that commission is payable. You can get the documentary evidence, but the export proceed has to come, remember. So before you pay the agency commission, now I told you there is a guy in Dubai assisted you to get a Bahrain order. So when you exported goods to Bahrain, the Bahrain buyer has to pay you. From that money, you can pay the agent commission. So that is how the agent commissions are paid. When you do exports, export proceeds have come. Now you are paying an agency commission. You don't pay in advance because you need to get the money. Thereafter only you making the payment to the agent, right? There are claims. What do you mean by claims? Claims could come from when you export. Sometime when you export, there are deficiencies in the goods. There are say you have sent some, let's say you have sent some vegetable, fresh fruits and vegetable to Middle East. Some of the fruits have damaged, or the box is damaged, or some of the fruits are smudged, they are unable to use. As a result, there is a financial loss to the buyer. So he's claiming now. He says, okay, I have sent you 5,000, but out of which $500 I'm claiming because $500 worth of goods are damaged, are not in a usable form. So those kind of claims can be remittable as far as you get the supportive document to say the money has come, now you are paying back. Okay, so that can be quality of the goods or the quantity. There can be sometime you would have got the money well in advance, but the quantity you shipped must be lesser. Quantity what you shipped is lesser, so you need to repay. There could be claims, possible claims can come, right? That is. Then there is the other one, import payment to designated third parties. This is also could happen. Sometimes you can make an import payment to designated third party. Mean it's like this. Let's say you are getting an invoice, a Sri Lankan importer buying something from Malaysia. The goods are coming from Malaysia, so the transaction is Malaysia. But the Malaysian company says all our payment should go to our Singapore account. So they have a different arm to collect the payment. So the Sri Lankan guy importing goods from Malaysia has to make the payment to the Singapore designated third party because they are the agent on behalf of the Malaysian supplier. So that kind of agreement is there. Even you can, as far as the goods are coming from Malaysia, you can send the payment to Singapore as a third party, designated third party. Since there is an agreement, goods that are exported to Sri Lanka from Malaysia, the payment need to be made to the payment arm in Singapore. Therefore, the payment can go to Singapore. That is a designated body to collect the payment. The collection of payments are done by the Singapore office. So the payment can go to, sometime it will be there with the same name or different name. Designated party, right? If they are different name, still is possible. Unless otherwise they show document evidence that is the nominated agent in Singapore. The Malaysian supplier has to give the document evidence to the importer that we are sending the goods to you. Say X company sending it to Y, X company in Malaysia sending the goods to Y. Now X company is saying Y to make it to Z, not to X. X is the supplier. X is sending the goods to Y. Y has to make the payment. The Y is not. X is saying to Y, don't make the payment to us, make the payment to Z. So the payment is go to Z, right? So in Singapore. So that is the example. That is called import payment to designated third party. There is a prior arrangement. You need to go through the sales contract or whatever, pro forma invoice or whatever to verify this arrangement, right? Return or cancellation of inward remittances. Sometime you would have got the inward remittances sent, but you are unable to send the goods. The remitter recall the funds. You are unable to complete. Sometimes that could happen because due to the pandemic time, there are a lot of exporter got advance payment, but they are unable to ship. Then the buyer would have said, okay, can you remit my money? So the return of cancellation of inward remittances is possible. The customer has to go to the bank and show the document evidence. I got 10,000 to my account. I have not done the exports. I need to remit this money back to. So it's a cancellation of inward remittances. Inward mean money has come as a form of inward remittances to the exporter's account, $10,000. Now the exporter is unable to do the export because there is no way he could find the goods now, or there is no transport, or there is a scarcity. or there is a practical difficulty, strike or whatever reason. There could be so many reasons, right? So this money has to go back to the buyer. So that is possible. The bank, the customer has to come and show the bank that he has got the money, but he has not shipped. So take a letter from the customer that he has not shipped, he won't remit the money. If the money has already come, you have to look at the remitter name. So remember, when you are doing return of funds, you need to look at something very important here. Look at the remitter's name when you are getting money. I told you now, the particular Sri Lankan exporter got the 10,000 from, let's say, from UK. A UK buyer sent 10,000 to buy teas. Now the UK buyer says, you are unable to send me the tea. I also don't want the tea now. Can you send me my money advance? I sent you $10,000. Now the Sri Lankan exporter want to send the 10,000 back to the UK guy. So the bank has to verify whether the Sri Lankan exporter got the 10,000 first place. And before you remit 10,000 back to the buyer, look at the buyer's name, whether it's the same person remit the money in the previous occasion. Because the exporter says, I got 10,000 from whom? From X, which is a buyer in UK. Now, when you are remitting back to the money, you have to make sure it's going back to the X again, not to anybody. So you should know as a banker, when the cancellation of inward remittances is happened and you want to return the money, you have to return to the same person who remitted initially to the country. You have to verify the name, right? That's very important. If you overlook and send it to somebody, then it will become a issue. It's become a non-compliance issue, right? We don't know why the payment has gone to some other party. So you need to be careful. Entrepot trade. Entrepot trade mean, we have learned this, right? Payment for importation of goods for re-export purposes. You know what is entrepot trade. You are buying goods from one country and doing some changes, or even without doing some changes to the commodity, you export to a third country. That is you call entrepot trade. So you can make the payment by entrepot trade as per the regulation. So the regulation permit for you to do the entrepot trade. So the bank has to ensure that. So let me give you an example. Let's say a Sri Lankan businessman, Sri Lankan trader who has a lot of contacts to get down goods from China. So he's found certain commodities which are more useful to some of the Bangladeshi garment factories. So what he has done is, Sri Lankan trader, he has gone to China and look for some cheapest and very lowest quality, or you can just say cheapest goods, right? A reasonable price. He found certain accessories, right? Raw material accessories he found from China manufacturer. Now he go and negotiate. So the sample and go and negotiate with the Bangladeshi export manufacturing companies whether he can supply this at this price, whether they will like to buy from him. If the Bangladesh people are willing to buy at that price, they negotiate when they are willing to buy the price. What the Sri Lankan guy will do, he will import from China and sending it to Bangladesh. So the goods are coming from China to Sri Lanka and going from Sri Lanka to back to Bangladesh. So this is called entrepot trade. So in the entrepot trade, the goods are coming from China with the changes or without changes going back to Bangladesh. So here you are making the payment to China subject to you are receiving more money from Bangladesh. So that is where you need to ensure the export leg, that is the money from Bangladesh is coming to Sri Lanka more than the money is paid to China. That is very important. So if the goods are coming from China to Sri Lanka, which is 10,000, and the money that should come from Bangladesh to Sri Lanka should be more than 10,000. Otherwise, this transaction has no use, right? So the local trader definitely will get more money from Bangladesh. So the bank has to ensure when they make the payment 10,000 to China, they must ensure the corresponding credit entry should be more than 10,000 whether it has come. That is permitted, subject to bank verifying that corresponding export leg is in the account. Yeah. You follow that, right? So in this example, if the goods are coming from China to Sri Lanka 10,000, and the goods are sold to Bangladesh buyer at the rate of 12,500, so there is a difference of 2,500 profit that should come. So how it should come? The money 10,000 going out of the importer's account, the entrepreneur trader's account, money is gone. Now there should be 12,500 should come into Sri Lanka. The bank has to ensure the money is coming more than what the money is spent, what the money is sent to China. That is we call entrepreneur trade. So you need to make sure the monies are subject to trade policy. You get more money from the entrepreneur trade, because that is the because it's you have to be very careful, because you send the money to one country without even goods won't come here, right? Remember, this is, you got to understand because you are sending money to China. Remember, it is not an advance payment. The goods are not coming to Sri Lanka. The goods are coming to port, and from there it goes through Bangladesh. So the bank has to be very careful. When they remit money, they know the goods are not going to come to Sri Lanka. The money is gone out of the country. So the corresponding credit should come into the country with more money, with more than what sent. It should be more than $10,000, right? That is called entrepreneur trade. Return or cancellation of inward remittances. AD may, so authorized dealer may return the inward remittance received in Sri Lanka and later recalled by the sender. Maybe he has sent by erroneously, or he has sent which has not been utilized. Sometimes this could happen. Sometimes what happened? There is a person, say Sri Lankan worker, he sent the money to his dependent here to buy an house or to make an advance payment for a house. He has sent 2 million rupees, but they look for a house, they couldn't find. Then they have alternative solution, not to buy a house at this moment. They go for a rented house. So the 2 million that has come need to be repaid. So the 2 million that is in the dependent's account can be remittable to the remitter, and showing the document evidence that they have not utilized this money. They want to send it back to the remitter. So that is possible. Return or cancellation. You can return the fund or cancel the TT and send the money. Both are possible. This is individual people sometimes send it the money, or sometimes what happens, some people send the money to reservation of hotels here, right? To make a reservation to their coming. Most of the hotels got the reservation, but when the flights are not there, when there are country locks down, they are unable to come. They want to cancel it, send the payment. So those payments are permitted, as far as those monies are not utilized in the beneficiary's account, can be sent back to the remitter, since the particular person claiming it, right? There is a remittance of funds in advance to obtain student visa, but since of late there are requirement. I think this is in New Zealand, if I'm not mistaken. When students are going to New Zealand, the New Zealand country requirement, the student has to open account and the money has to go to that particular account for visa purpose, right? So there is a requirement. So central bank permit that kind of a transaction. That means a student can apply student visa subject to sending the fee in advance. So in order to obtain student visa, the money has to go. While the student is here, the money has to go. So the country to country, they will implement new regulation. So sometime Canada might come and we stop accommodating any overseas student for next 2 years. That is a new regulation they brought in. Or they might say, if anybody coming here, they have to take an insurance for this much of amount. These are policy decisions taken by the respective country. So when we are trying to getting into that country for some services, we have to abide by their regulation. So our regulatory requirement also need to be changed accordingly. Otherwise, our student cannot go with if the central bank do not allow this kind of a payment to be made. No student can go to New Zealand, because if the regulator says no visa money can be remitted unless the visa is given, then only the payment can be made. then nobody can go to New Zealand, right? So the requirement is before you get the visa, you have to submit the visa fee, student visa fee. So verifying the bona fide of the documentary evidence, necessary document, bank can remit the money, right? So there are certain government bring regulation accordingly. If the central bank permit that to happen, because what happened, these students would have approached central bank, guardian and all approached central bank, and they would have pleaded this should be given. Then only central bank would consider check with the government of New Zealand. They also said we have implemented a regulation like that. Then we have to change our regulation. So there is a provision now. Reconversion of unspent rupees. What is that? Reconversion of unspent rupees. Now you would have seen some foreign travelers coming in, and when they bring dollar, they will exchange it at the airport arrival, or when they go to the bank and or money changer, they will have a receipt after encashing into rupees. Now when they want to go back, they have some residue amount, they have some balance rupee amount, so they want to reconvert into dollars. So that is permitted, provided you show the receipt. Suppose say a foreigner travel to Sri Lanka, he has encashed $1,000 into rupees, right? He spent. However, when he about to go, he has 200,000 balance. He only spent 800,000. He has 200,000 balance. So he comes to the bank and say, I want this 200,000 rupee to be reconverted into dollar and give me. So that is possible because he brought $1,000 and converted at one particular bank. It's generally you tell that particular person to go to the same place to reconvert. That is better. Suppose say if the People's Bank has encash it, it's better to go to the People's Bank to reconvert because they have the records, right? It is recommended, but there is no hard and fast rule. It is only done by People's Bank. Other banks can do after verifying the document. The best practice should be the same place where the records are there. That doesn't mean others are prevented doing. No, they are permitted to do that, provided you get the supporting documents to verify he has brought in $1,000 which has been encashed to rupees. Now he has the balance amount, then it is reconverted is possible, right? These are some of the permitted transactions. Okay, so we are trying to moving on to some of the permitted capital transaction. Permitted capital transaction, right? So some of the transaction we already learned in the previous class, right? These are capital in nature, quite different to the current transaction. You can see movement of assets. It could be financial asset, it could be real assets. You may call it in common capital assets, right? What is real asset? Real asset mean immovable building, land, real assets, right? The financial assets, or maybe say take shares, take investment in securities, investment in all bonds, treasury bill, debentures, unit trust, bank deposit, everything construed as financial assets. Real asset, financial assets, both are common name is capital assets. So the capital asset can be divided into real, financial. Real assets are immovable property, land and immovable property, and even vehicle, all other movable, right? Financial assets are all that securities you have, bonds, treasury bill, treasury bonds, securities, shares, all that considered as a financial asset. So the movement of assets are considered as a capital transaction. So capital transaction divide into different 4 classes. One is classes of capital transaction undertaken outside Sri Lanka by person resident in Sri Lanka. I think we have learned this. Classes of capital transaction undertaken outside Sri Lanka by person resident, which you learned last session, outward investment account, OIA. We learned that. Look at the second class of capital transaction undertaken in Sri Lanka by person resident outside Sri Lanka. That's mean inward investment account. The first one is OIA, outward investment account. Second one, inward investment account. The first one, investment going out of the country. The second one, investment coming into Sri Lanka. Then you have remittance of funds by emigrant, yes, which we learned other day. Emigrant, we learned that, right? Migration allowance, CTRA, area account, NRRA, all that we learned that. That is, again, kind of a capital under emigrant. Then classes of miscellaneous capital transaction. So, quickly go through what you learn. Classes of capital transaction undertaken outside Sri Lanka. Yeah, who are the person permitted to make investment outside Sri Lanka? You know that people, right? You know, we have seen the list of people: company, listed company, unlisted company, that is public quoted, private partnership, banks, insurance board, EPF, all that are permitted, right? So what is bank need to, before make this investment as authorized dealer, what are we supposed to do? We need to look at the bona fide of the person who carries out the transaction, and that such transaction is compliant with the regulation. So before you make the payment, you as a bank, you need to ensure all these capital permitted transactions are done by looking at each request on its own merit to verify whether it's a bona fide. The transaction is a genuine transaction, actual transaction, right? And within the regulation, compliant to the regulation. It is complying to the regulation. Supportive document or document to be obtained. You know, supportive document when you are making outward investment, supportive document. Necessary document evident, yes, you have to pose a supportive, and as a investor, you need to prove yourself by giving certain documentary evidence to authorized dealer. So that you need to submit to the bank. As a board of resolution, when you are making investment, which is your internal policy of the company, okay. If it is a declaration by the investor as a sole proprietor or a partnership, right? So each person has to commit or must be given an affidavit, right? So these are requirements to fulfill the bank because these are investment going out of the country, I remember. So you need to be aware of what are the document evidence. Every authorized dealer shall maintain information and documentary evidence. Yes, as I told you, period not less than 6 years. So when it comes to investment, you need to maintain this record more than 6 years if required. So the mandatory period is 6 years. So if there is any requirement to keep the record beyond that limit, you have to keep it. That is what suggested. The electronically you store this data or the documents, so that you will have a lesser place requirement, right? And the effectiveness of electronically showing is very less costly, although initial cost will be there. Once you have the data file or whatever, then you can continue to have any number of record with a small space, right? Rather than piling up physical documents in the record room, and you have to find when the records are extending, the banks need to keep more records. It become very difficult, right? Now banks are going for electronically scan and verified and keeping it, because anytime you can get a printout, right? So storage image is the best way to overcome this issue. There are certain party prohibited to make outward investment. You know the prohibited party. A voluntary social service organization like sports club and all, they can't do investment because that the name itself not authentic person. It is doesn't have any nature, artificial person. It doesn't have any quality a person should possess. These are artificial organization. Voluntary social service organizations are not considered as a real person, right? A company limited by guarantee also not considered as to be invested. So what do you mean by company limited by guarantee? This is generally a non-profit making organization like NGOs and all. They are become a limited by, so those company can form uh, and the memorandum of article will have the clause: each shareholder, in the event of company is wound up or insolvent, they will bear certain amount of money only. So in the event of closing up the company, they have guaranteed a particular amount, they will bear the loss so much. It is not like a normal company which issues shares. You are limited up to the shares that you bought, right? So you have to forego that money. But when the company is limited by the guarantee, though it is a artificial person, that doesn't have the quality to bear the losses. Therefore, because that is limited by the guarantee, each shareholder limiting themselves to a certain amount in the memorandum of article in the event of the company is wound up. Say the company is closing down, ABC, 3 people put together in the company, but ABC said each one will bear 5 million only. So if the company closed down, each one will bear 5 million only, nothing more than that. If a company of that nature making investment outside is not permittable, because when you're making investment, there could be losses you have to bear. So these people, by limiting their amount by guarantee, are not permitted to make investment outside. So that is the reason a company limited by guarantees are not permitted to invest outside Sri Lanka, because they don't have the capability to bear the losses in the event of the investment become unprudent, right? They are unable to bear up the losses. Therefore, a company limited by guarantees is not permitted. Generally, it's a service non-profitable organization like NGOs, associations. All those are uh, company limited by guarantee. Then a person resident in Sri Lanka against which there is a pending court case going on, so he can't make. That is the reason I think when you are making investment, you have to get a clearance from central bank. So I told you, when there is a pending ongoing case is going on with a particular person, when there is a court case is filed against the person, that court case is still going on, he can't make an investment outside Sri Lanka. So there are 3 parties prohibited. One is voluntary service providers, sports club, all that organization. A company limited by guarantee cannot invest. And the person resident in Sri Lanka against whom a pending lawsuit is filed. So he is unable. So these are the prohibited parties, right? Any eligible resident investor is permitted. Yeah, you know what type of permitted investments are there to acquire shares: ordinary, preference share, debenture, corporate bonds. I think we learned that in previous class. Units regulated. So I can speedily go because you already know sovereign bonds. We learned that in the tabulated form. I showed you all this. Then also you can set up maintain a branch or liaison office, a branch or liaison or marketing or agency, project representative or whatever office you can put up an office in overseas. So other than the individual, a partnership company can do that. They can set up a branch or liaison office, a project office in overseas, right? That also permitted investment opportunities. So those are permitted investment. So you know OIA, right? Outward investment account. We learned that. So OIA will be open to make an investment outside Sri Lanka. It is account will be open at the authorized dealer in order to remit the money. May be open and maintain savings or term deposit. Term deposit only comes when the out of the return derived from the yes. So as I told you last class also, you have to be very careful when you are making outward investment. Remember, when you are converting rupee and making outward investment, I told you you can't transfer funds to outward investment and keeping the money there. No, when you are making an initial investment, let's say you want to buy as an individual person, you want to buy Google share, right? You decided buy 1,000 shares Google, but initially you want to buy $3,000 shares. You know, to buy $3,000, how much you need to remit. So when you want to remit money, let's say you want to remit Sri Lanka rupee 600,000. So the 600,000 rupees to be converted into dollars and credited to OIA on the same day, the money should go out. You can't keep the money in rupee converted into OIA and keeping it in OIA. No, you can't. Once you converted, putting into OIA to make an investment, it should go on the same day. But then what are we talking about? OIA funds can be kept in the savings and the term deposit. That is after making the investment. When your returns are coming, you bought the Google shares, now you sold it. Those are sale proceeds. You got a dividend. All that can coming back to your OIA. That funds can be kept in the term deposit. So you should understand the OIA, when you're making an initial payment, you have to send on the same day when you convert it and putting into OIA account. Once the OIA money is invested, then return can come back to credit to OIA. That can be kept as a savings or a term deposit. That is what I within bracket I said. Out of the return derived from the out of the returns, that means your dividend or your sale proceeds, that can be kept as a savings or term deposit. Your initial money has to go. You can't keep it in the OIA account. You have to send the money on the same day when you are converting. Right? Got it? Right. Then OIA shall be held as a sole account or maybe held as a joint account with the eligible person. That is possible, right? So those are outward investment account. You have a rough idea because we have learned that, right? This I told you, but I have not explained to you in detail, right? These are list of documents should be obtained for all outward investment account. So what are the documents to be obtained outward investment account? These are the documents. There should be request letter from the investor that he is going to make an investment. He has to give the details. What is the investment he is going to make, the date and the name of the company, what type of investment, whether it's a share or preference share, ordinary share, or corporate bonds or debentures or sovereign bonds or whatever, right? Or branch office, whatever, right? Then I told you a recommendation from a chartered account or CFA, charter hold of the CFA institute also can give a recommendation. That means some qualified person has to go through the investor's proposal and should recommend this investment is good. This investment going to give some return to Sri Lanka because you are converting rupee into foreign currency and making investment outside. We don't know what is going to happen, right? There should be somebody, a professional person who has the knowledge, should understand what is this investment. Say I am going to buy the Google share or Microsoft shares. So I want to open a OIA and want to invest in. As a resident, I can do that. Okay. Now I am approaching a chartered accountant or charter hold of CFA. Can you recommend my investment? So he will ask all the information. I will say I'm going to buy 10,000 Google shares. Current price is dollar so much. I'm expecting a return of so much. The Google is growing. All that I give. So the chartered qualified accountant or the CFA holder, chartered holder will go through my proposal and recommend. He will also verify and he will also knows the international investment opportunities. He will go through my proposal, and if my proposals are justifiable, if it is a prudent investment, he will recommend. If not, he will reject. He will not give a recommendation. So central bank says the people who can make investment has to go through this process. They have to get the recommendation from a qualified profession, whether the investment is viable, right? This is just an estimation, right? So we won't be able to make sure. So that sometimes this could happen. So the chartered accountant so recommended. If the external factor can collapse the investment, right? These are the prudent steps that can be taken by a country regulator before you make an investment, so that there is a possible risk, maximum risk could be mitigated. So you are taking precautionary measures, right? So the chartered accountant also will have the knowledge when you are buying a shares. In the event if the share market crash, what is your second backup plans? Whether you can bear up these losses. All that he will also asking the question. So the investor should know, okay, this is my additional investment. Even if this investment, can I retain? So when you are investing in share market, always remember if the share market is collapsed, you should have the retention capacity. So if I invested in Google shares, if the Google is not doing well, I am not in panic to sell and come out of the market. Then the country will lose the money. Instead, I will wait. I have the retention power. I don't want the money now. I am going to keep this my 10,000 Google shares for the 2 years time. By that time, the company will grow. My investment may be double or triple. Right? That is possible. So therefore, the retention power of the investor need to be checked by the chartered accountant. So he will ask all the questions before he recommend. So the investor's retention is very important. Otherwise, you go and buy the shares and you are borrowed funds you invested. Then you are in a short period of time you want to return back to the borrower, or you are now into panic because borrower is demanding the money. Your shares his price is come down. So there is a loss. So the chartered accountant has to go through the recommendation, taking all these points into consideration, right? So that is, you have to be careful. Then, as I told you, there is a clearance letter every time when you make investment. Yeah, the clearance letter to be taken from the Department of Foreign Exchange of Central Bank to inform, to verify and say there is no pending case against the investor. Because if the investor has done some uh, irregular transaction in past, there is a query now going on, so the investor cannot invest. I think we saw in the 2 slides before, prohibited parties, because when there is a case going on with the investor, ongoing case, he is not permitted to invest. So therefore he will be not allowed to invest if the central bank doesn't give the clearance letter. So the clearance letter also mandatory for the bank to send the money out. So that is also one of the key factors. Then the tax clearance to cover the amount of investment. Tax clear documents also required. That is to ensure the money that you are remitting out to make investment are after paying taxes to the government. So say I am investing in 10,000 Google shares. I am going to invest about, let's say, Sri Lankan money, 2 million rupees, right? So I am permitted to invest about $200,000 in dollar terms, right? We saw the last previous session. We know individual has a limit of $200,000. So 200,000 means 40 million I can invest now. So I am investing only 2 million, right? So when I am investing 2 million, I should get a tax clearance, but this 2 million is after paying taxes. So I have paid all my taxes. So that is what you get the tax clear. When you make an investment, the investment money that you are going to convert are after tax, net of taxes, right? That is what the tax clearance is all about, right? So now you know, recommendation from a chartered accountant, clearance letter from a central bank, tax clearance, and an affidavit. Applicable to individual or sole proprietor, or maybe a resolution passed by the board of director of the eligible company or legal entity. That is, that they are aware of the terms and conditions before they make the outward remittances. They know the law of the country. They know the prevailing regulation in the country. They know what is the OIA direction says. So they are giving an affidavit. As an investor, I am so and so, hereby confirm I am well aware of all these directions pertaining to outward investment account. Or the board resolution must be passed by the company secretary that the board has permitted, that they are aware of this investment. Any financial losses come, they are willing to absorb, or they are in a position to absorb. There's a board resolution. So these documents to be given to the bank before they effect the payment. So you know, in summarize, what are the requirements when you are making outward investment: a request letter from the investor, a recommendation from a chartered accountant, clearance letter from central bank, a tax clearance, and an affidavit. An affidavit is generally signed by the JP or a lawyer, just to make sure the declaration is verified, right? What is the declaration? That is, you are saying you are aware of the terms and condition of the regulation, and you are making the investment within that terms and condition, compliance to the terms and conditions, right? That is what all about the investment, right? Okay, now acquisition of assets or investment in overseas for no consideration. Sometimes you can acquire any number of shares without making no consideration, means without sending any money, right? That is possible. Then central bank has no problem. They said, as far as you are getting any shares, any amount of money, any amount of shares by dividend or what bonus shares or whatever, no consideration means no payment going. It's kind of a free of you are getting, maybe inherited, right? So these are acquired uh, form of assets, right? Say if you have made an investment, right, a company, now they are paying dividend. So that dividend can be credited, and they are giving right issue. Your investment is increasing now, for which you are not paying. Right issue you are not paying, you are getting free shares. Or sometimes scrip dividend, that means company declare the profit, they give certain percentage as a profit in dividend in cash form. Some of the scrip dividend mean they give certain amount of shares to credit your account. So those are accumulated, for which when you are making investment, you are not making additional investment to acquire such inherited shares or such dividend paid to you later. So those payment are easily, those shares can be credited to your account. So you are not making any consideration. Even I think I explained to you, employee share option plan, employee share. I told you, when you are working for a company, sometimes the employer want to keep the key management employee. The employer, if you are working for a organization, that organization wanted to keep the key resource people, because they feel these people are asset to the organization. So they want to retain those people. So what they will do, they kind of are giving in the form of a bonus. Instead, without giving bonus, they will give their own shares to them. Sometimes they don't pay anything, or sometimes they will pay with a very predetermined lower price. So that is two type: employee share ownership plan, employee share option scheme. You will be given option to buy the share at a predetermined price. Ownership, they might give you free of charge, depending on the company policy. So these again, you are getting without making any investment, you are getting free shares into your account, right? So there is no limit as far as you are getting free shares. There is no money going out. Absolutely no problem. There is no limit for that. When you are sending money, only the limit will come into force, right? Then, if there is any requirement to make out, sometime, as I told you, sometime share option schemes are, you need to pay a certain amount of money. But what happened when the overseas company giving this to a local, let's say, if I take you, you probably aware this WNS, right? That is one of the outsourced company who are working here in Sri Lanka. They are doing they have the parent company in UK. They have the branch office here. So what they do, they recruit Sri Lankans. So the Sri Lankans are working very hard in those companies. So they identify the key employees, and the WNS, their parent company, want to compensate them, those employees. They will say, okay, each employee is permitted to buy their own shares. When the price is, let's say, $10, they are giving it at the rate of $6. So the branch office the WNS branch office here can remit the money on behalf of all the employees to acquire under ESOP. They can remit money. So that is permitted. So this is again under outward investment account, a separate section called share option scheme. So under share option scheme, the subsidiary, the WNS branch in Sri Lanka, can remit money on behalf of all employees. Let's say there are 100 employees working in WNS in Colombo branch, right? The WNS has some branch. They are occupying in certain, I think they are in some buildings, reputed building. They are working in different location. Those employees are working around the clock. They are different time. UK time they are working here. Some of them are rotation basis. So when those people are need to be compensated by the parent company, they will communicate to the employee, okay, out of 100, there are 40 seniority wise, there are 40 employees are entitled for the share option. Now the local office registered as a foreign entity here, the overseas office, WNS Colombo branch, can remit, that Colombo branch can remit the money as a one payment on behalf of all the 40 staff for the share option amount which they are entitled to remit money to acquire the shares. So the branch office can make a remittances on behalf of 40 people, and that money can be sent and they can acquire the share. So that also possible under the OIS scheme, right? There is a investment incentive for the investors. Suppose say it's like this. So you are making investment in overseas, right? When you are making an investment in overseas, right, you are getting a profit. Let's say I have invested, uh, let's assume a company invested a company invested in shares. Okay, a company invested in shares and preference shares in an overseas company. So that company is shares are going up, they are doing very well, and the investor want to sell those shares. When he sell it, right? When he sell it, he had a big profit margin. He bought the share, let's say $10. He sold it at the rate of $35. He had made a 250% profit. 10 rupee share, he has sold it for $35. 10 rupee share, $35. $10, not 10 rupee, $10 shares, sold it $35 per share. So each dollar you made a profit of 25. So the profit that you made from the profit figure alone, up to 50%, you can reinvest. Suppose say if I give you example, let's say your investment amount is, you are invested as an individual investor. I have invested, I had the limit of $200,000 as an individual. I can't invest anything 200,000 in my lifetime, right? I can invest only 200,000 in my lifetime. That's a limit. Out of this 200,000, right? Let's say I made an investment exactly 200,000 maximum. Then I got a profit of other $25,000 alone, profit alone for my investment. Out of 25,000 profit, 50%, $12,500, I can make reinvestment. From the profit, I can make other investment. That 50% from the profit will not come into my 200,000 limit. You got it? So I have a limit of $200,000. I can't make anything more than $200,000. But my investment give me a return, give me a profit, say $25,000 profit alone. Out of the profit, 50% of the profit. That means out of $25,000, 50% is $12,500. I can make another investment. That 12,500 beyond my 200,000, in addition to my 200,000 limitation. Because that 12,500 I made out of my profit, 50% of my profit alone, 12,500. So that is the incentive given if you are making a profit, because it's good to the country. You are making a profit. Out of the profit, you better invest. As far as you are not converting rupee, you have been given a limit. Up to that limit, you convert as an investor. Anything thereafter, if you make a prudent investment and you are getting a huge return, out of the return 50%, you can make a further investment. That is in addition to your limitation of 200,000. Is that clear? Yes, that is incentive for the resident investor. Okay. Okay, now we are moving on to the guarantee permitted in respect of capital transaction. Right. So I will stop it at this moment because I think we have almost approached 2 hours. Right. Have a break of 15 minutes. Maybe we will meet around 3:45. Right. We will meet around sharp 3:45. Right. Then continue till the end of the session. Try to cover it. If possible, attend some question also. So we'll meet you sharp 3:45. Be there by 3:45, please. Okay. Can somebody say yes? I can start.
Yes, sir.
Right. Fine. Okay. So let us move on to guarantees, right? So the guarantees also, there is a regulation. So yeah, I'm trying to cover the entire foreign exchange regulation, right? Yeah, in this few sessions that I have taken, I almost covered the entire thing, right? Except one or two things which factors which I feel uh, uh, not relevant to the bankers. Other than that, uh, 99% of foreign exchange act are covered, because that is the reason we have taken few session, and today I am covering whatever not covered in the previous section. All the foreign currency account we learned, and there are few accounts to be, so that also we try to cover it today. So guarantees, other separate direction issued by central bank on international guarantees. There the guarantees are permitted for certain related to outward investment. Also, they have listed certain guarantees. Here we are talking about outward investment. Though I told you we have been learning outward investment account, I told you last session what is the current status. If anybody want to invest outside Sri Lanka, OIA currently, is it possible? No, temporarily suspended. As I told you, currently outward investment is temporarily suspended. Then you might ask the question, is there any other way to invest? Yeah, only way to invest, if you can borrow from a foreign lender, that borrowing funds can be invested through outward investment account. And there is an exception if you have already invested and there is a regulatory requirement in the invested country, investee country. Let's say you are invested in Mali, some hotel project. There is a requirement that particular company has to pay some duty or taxes to their tax department. Those are regulatory payment. Since you have made the investment, regulatory payment can be allowed to make. So those are the only exception at the moment. If you are OIA, existing OIA investment, if you want to make any subsequent regulatory payment, yes, that can be allowed. Or if it is a fresh investment, the only option available, you have to borrow funds from foreign lender, right? And that funds, I think we learn external commercial borrowing account. So you can borrow from foreign lender and you can make an investment. There again, remember when you are borrowing, the borrower has to be company. The borrower has to be incorporated company, whether it's a private or public quoted company. So you know the standing, right? So making outward investment as a fresh investment at the moment is prohibited. Exception for the existing amount, regulatory payment, mandatory payment can be made, and fresh outward investment only is possible from the borrowed funds. That again, if the limited liability company in a position to borrow from a foreign lender, exclusively that funds could be utilized for outward investment. Yes, it's permitted because we don't have money to convert and pay. That is the issue now. So therefore, OIA is currently temporarily suspended until further notice for the new investment converting rupee or converting into foreign currency and investing outside Sri Lanka at the moment. Right. But remember, we need to know the regulation. Right. From there, when you make an investment, right, well, suppose say you have already made an investment that you bought the shares of a particular company, right? Now you are holding shares. Let's say Sri Lankan company. Let's say we will take example. Let's say Haley's Group made an investment in Bangladesh, right? Let's say a garment factory, or they have invested in a bigger garment factory in Bangladesh. Now that Bangladesh company in Bangladesh is a large garment factory. Now that company approaching their bank to take a loan. That Bangladesh company approaching their banker to take a loan, right? And that Bangladesh company, 50% is owned by Haley's Group, 50% owned by the Bangladeshi shareholders, right? Now, that Bangladesh company asking Haley's Group, look here, you are 50%, you are holding stake in our company. Now we want to go to borrow from our banker. Our bank is asking a bank guarantee. If we are giving an international bank guarantee, our bank might give a loan to us. They want a guarantee. So they are requesting you to Haley's company to issue a guarantee favoring the particular bank for them to borrow, favoring the Bangladeshi company's bank for the Bangladesh company to borrow. So you got the case clear? Right. Now, cases like that, the guarantee can be issued. So that is the number one here. In the event where a company incorporated in Sri Lanka, that is Haley's investor, required to provide a guarantee to enable the company incorporated outside Sri Lanka, which is the Bangladesh garment factory. Investee is the Bangladesh garment factory. Haley's is the investor. Haley's Group is investor. Bangladesh garment factory is the investee, in which the said investor is a shareholder. Haley's is a shareholder. To enable the Bangladesh garment factory to raise facilities from financial institution, a guarantee subject to maximum 1 million may be issued if the investment in the said investee has been made in compliance. That means central bank says if the investment made by Haley's Group as per this regulation, up to $1 million guarantee can be issued, subject to the guarantee value shall be proportionate to the percentage of shareholding in the investee. So now remember, it's like this. let me explain to you so that you will have better understanding. Now, $1 million is the guarantee maximum limit. Central bank says that again proportionate to the shareholding. Suppose say the investment made 50% by Haley's, 50% by the Bangladesh company. Haley's invested through outward investment account 50% in the Bangladesh company. Right, 50%. Now that Bangladesh company, if you take the total asset value of the Bangladesh company, total company worth, their capital, total capital of the Bangladesh company, let's say we will presume example, $2 million. The company worth $2 million. Out of which we will take $1 million, otherwise the same amount will get confused. $1 million is the total. $1 million is the total capital of the Bangladesh garment factory. Out of which 500,000 is owned by Haley's, 500,000 owned by the Bangladesh garment factory. So the 50% is owned by Haley's, 50% is owned by the Bangladesh company. The capital is 1 million. Now, when they are trying to take a loan, let's say they are going for a loan of 1 million. They are going to take a loan of 1 million from the bank. That bank want a guarantee. Now, central bank says, if the investment is made by whatever the proportionate, if you take the total investment 50-50, Ale is 50, garment factory. So when they want to borrow 1 million, the Alis company can get a bank guarantee for 500,000, 50% of the share capital, proportionate, right? It is proportionate of the shareholding. The proportionate shareholding is 50-50. I told you the capital is 1 million, contributed 50 by Alis, 50 by the Bangladeshi garment factory. So when they go for a loan of 1 million, the guarantee Alis can issue is 500,000. How do I say 500,000? Because the loan is 1 million. The 50% of that facility, 50% of the 1 million loan facility, is the proportion is 50-50. Shareholding is 50-50. Therefore, when they are taking 1 million loan facility, the guarantee can be given by 50%. That is 500,000 again by Alis, 500,000 by that particular garment factory. So if I give you a further example, let's say they are going for a, they have the capital of, let's say they have the capital of 2 million, total 2 million. Alis put 1 million, garment factory put 1 million. Their capital is 2 million. Now they are going to take a loan of, let's say, 3 million loan. Now carefully understand, it is again 50-50. 1 million, Alis put the investment $1 million, and the garment factory, the Bangladesh put $1 million. The total investment made by both together is $2 million investment, capital investment made by these two parties, each 1 million. Alis 1 million, Bangladesh garment factory 1 million. Now the Bangladesh company going for a loan facility of $3 million. Now tell what is the amount Alis can give. Now you know 3 million mean the 50%, because the shareholding proportionate is 50-50. How do you know 50-50? Because the capital is 2 million, 50% is Alis, 50% is Bangladesh. Therefore, the 50-50 is the percentage. So you have to apply the same shareholding proportion to the guarantee amount. So the guarantee amount request is 3 million they are taking loan, and the Alis has to issue for 1.5 million. But central bank says, look here, the maximum you can issue is 1 million. So therefore, Bangladesh loan project, the Alis can issue maximum is $1 million, because central bank has a ceiling. Though your proportionate is 1.5 million coming, because the loan is 3 million, 50-50 mean Bangladesh company has to issue 1.5 million guarantee, Alis has to issue 1.5 million guarantee, because they are going for 3 million loan. So 50-50 mean 1.5 million guarantee has to be issued by Alis, but Alis cannot issue. Central bank has put a cap of 1 million. Therefore, if anybody asking you a question, if the Alis want to issue more than 1 million, what is the case? They have to go for special approval from Ministry of Finance. That is the regulation. So you can't go more than 1 million. The maximum is 1 million. If they want to go to special approval from Ministry of Finance to send more than 1 million guarantee, they have to go for a special approval. If not, they can issue up to, that is what the last para, guarantee value shall be proportionate to the percentage of shareholding. That means you have to take the total capital of the invested company, how much percentage Alis holding. It's a 50-50. Therefore, Whatever the loan comes, it has to be 50-50, right? Understood? Okay. There is other guarantee. That is, I told you, they are acquiring a shares. Sometimes you can have your own branch office. ALIS will have a branch in Bangladesh, some engineering arm that is fully owned branch. Now that branch want to get a loan. That branch in Bangladesh want to get engineering company. Let's say in Mali, take other example, not to take same country. Say ALIS is the same company. They have engineering office. They want to do a project in Mali. They have a branch office in Mali. Now that Mali office, registered office in Mali, they are approaching bank to take a loan. So that company, that branch want to issue bank guarantee, asking ALIS to support. The ALIS is fully owned branch. So that can go up to 500,000 per branch. The guarantee can be issued. So the regulators given permission up to $500,000 per branch. A guarantee can be issued for them to borrow. For the ALIS branch in Mali to borrow from their bank, up to 500,000 guarantee can be issued. Because when you are investing, remember, when your Sri Lankans are permitted to invest outside Sri Lanka, once the investment is made, remember, it is not, we can't stop it because they are the shareholders. When the company is growing, there are certain amount of money they have to contribute as a shareholders to support. Otherwise, the company will never grow. Because when you are allowing somebody to invest in a company as a shareholder, whenever there is a requirement to contribute by this company, they have to contribute. That is the reason central bank permitting these are guarantee can be issued since the investments are made as per the right channel through OIA. If you are having a branch office, up to 500,000 you can issue guarantee. There is no proportionate, no, it's your own branch. So they are up to 500,000 you can issue. That is the second guarantee requirement, right? Say in the event the investor does not have, the ALIS say does not have the capacity to provide the guarantee in both occasions. They can't support the Bangladesh operation, they can't support the Mali operation. Both guarantee they are unable to issue, right? Then on behalf of the investee, the parent company or fully owned subsidiary of the investor in Sri Lanka. Suppose say the ALIS company, what I told you is ALIS, but there is a the group. If you take the group goes as ALIS Group Private Limited. This is one of the arm is ALIS company. The ALIS Group is the parent company. The ALIS company is a subsidiary of ALIS Group. So if the investment made by the subsidiary, which is the ALIS company, they are unable to give a guarantee because they don't have financial reserves or financial strength. So they can approach their parent company, which is ALIS Group, which is the parent company, mother company holding all the subsidiaries, right? The parent company has the capacity to give on behalf of the investor, they can do that. So that is what central bank says. Then again, they say subject to the limit applicable. The parent company can give provided if it is a shareholding percentage, if it is a investment in Bangladesh operation or the branch operation up to 500,000, the parent company give on behalf of the ALIS. So you got to understand, if the investor in Sri Lanka, a company unable to give, if the investor has a parent company, the parent company can invest on behalf of their subsidiary company. That is for the third one. In the event investor does not have the capacity to provide the guarantee specified about two types, which we learn 1 million and 500,000 on behalf of its investee, the parent company or fully owned subsidiary of the investor, parent company or fully owned subsidiary of the investor, which is ALIS Group, Sri Lanka, may request to issue a guarantee through their banker with the consent of the investor, that is with the ALIS company. Such guarantee may be issued subject to the limitation 1 million and 500,000, which is 50% shareholding or whatever percentage, and the 500,000 if it is a branch. So you got the point clear. There is a provision if you are making an investment. If a company, ALIS company made the investment, they can contribute as per the shareholding in the Bangladesh operation. Whatever shareholding they can contribute, subject to 1 million. If they're having a own branch in Mali, they can contribute up to 500,000 for the Mali office to borrow from their bank. A bank guarantee can be issued by the local bank. These bank guarantees are issued to support, to get a bank guarantee, to bank facility in that country. Because when you issue a bank, and say Bank of Ceylon issuing a bank guarantee, mean what does it mean? Bank of Ceylon issuing a bank guarantee on behalf of ALIS $1 million to Bangladesh company, mean that bank guarantee can be utilized to borrow. In the event of a default, the Malay bank can claim it from Bank of Ceylon because they are giving the strength of the bank guarantee. So as I told you, I think when we learn the bank guarantee, I think I taught you, bank guarantees are instrument where it facilitating transaction between two parties. So the Bank of Ceylon guarantee going to help them to get a finance, get a loan from Bangladesh bank. Same way, if a ALIS has issued a branch in Malay, if they are taken a People's Bank guarantee to Malay support, the Malay bank can grant a facility against the People's Bank guarantee. In the event borrower doesn't pay, in the event the Malay office doesn't pay, the Malay bank can claim it from People's Bank. So that is the reason they're asking the local bank to issue a bank guarantee. So the third option is the parent company. If the ALIS do not have financial strength, ALIS can ask the ALIS group, which is the mother company, top company. They have a lot of facility. So they will use their credit line, their bank limits to issue guarantee on behalf of one of their subsidiary, which is the ALIS company. Subsidiary, ALIS company. ALIS group is a group, main group. So you know when there's a ALIS, they will have a lot of subsidiaries. Ravi Trading, Ravi Brush, they will have a lot of subsidiary, right? They are having a this rubber factories, a lot of diversified conglomerate is the ALIS group. So ALIS group can issue a guarantee on behalf of their investor, right? Subsidiary. Guarantee permitted in respect of capital transaction. Yeah, in the event where a company incorporated. So all this is related to capital transaction. Right? When there is a company incorporated in Sri Lanka, act as an agent on behalf of a company outside Sri Lanka. Let's say agent. Suppose say there is an Indian company, Mobitel. They have an agent here, local agent here. I'm just giving an example, right? If the local agent here are supposed to give a bank guarantee to the parent company under the agency agreement. So the agent here, Airtel agent here will go to their bank, Sri Lanka, go to their bank and issue a guarantee as per the agency agreement. They are supposed to give a guarantee to their parent company. So that is possible when you have a legal agency agreement between the principal and the agent. So I will repeat it again. A guarantee could be issued by the agent incorporated in Sri Lanka as per the agency agreement to the principal in India, example, a guarantee, right? So there is a requirement, the guarantee to be given to the principal. So when you are having agency agreement, a lot of agencies are working, shipping companies are agents here. So sometimes they have to give a guarantee because they are supplying something to the agent. In the event agent doesn't pay, they have to claim the bank guarantee. That is the reason they are asking bank guarantee. So when the principal wants a bank guarantee from the agent, sometimes why they want a bank guarantee? Because they are sending some goods to the agent. The agent has to sell it and send it back the money to the principal. In the event agent default, principal doesn't have anything because he has to claim it under the agency agreement, which is going to be cumbersome. Therefore, they want a bank guarantee. So the banks are permitted issue guarantee when they have a agency agreement, valid agency agreement. So now if you read it, you can see in the event where a company incorporated in Sri Lanka, which is agent Airtel, act as agent on a company incorporated outside Sri Lanka, which is the parent company, the principal, subject to the agreement entered into between both parties, a guarantee may be issued on behalf of the agent. The bank, local bank, can issue guarantee on behalf of the agent, favoring the principal, favoring the Airtel India, up to the amount stipulated in the agency agreement. So they have an agency agreement. As per the agency agreement, they can issue a guarantee. That is also permitted, right? So all depends. You need to have a facility with the bank to issue a guarantee. So these are the permitted guarantees, right? Then a guarantee on behalf of a person resident outside Sri Lanka. Now carefully look at this question. The theory part. A guarantee on behalf of a person resident outside Sri Lanka, the investor. Now investor not in Sri Lanka, it's outside, a foreigner. Against the funds lying in the creditor. You know what is inward investment account. The foreigner can make an investment in Sri Lanka. If the foreigner wants to make an investment in Sri Lanka, he has to open inward investment account. Now the funds are lying in the account. Now he is asking the bank, keeping the funds and issue a guarantee against the Colombo Stock Exchange. Sometimes this could happen. If you want to buy stocks, if you want to buy the Colombo Stock Exchange, because foreign investor can buy the share market listed shares, he can buy. Foreign investors can buy. If the foreign investor want to buy through the Colombo Stock Exchange want a bank guarantee from a local bank. So the foreign investor can ask the bank, because his IIA account is maintained with the local bank. Suppose say foreign investor in USA has open IIA with commercial bank. Now he is asking commercial bank, the investor asking commercial bank, I want to issue a guarantee 1 million, 5 million rupees to Colombo Stock Exchange. Can you do it? As far as the funds are there in the IIA account, bank can issue the guarantee. So that is a guarantee. A guarantee on behalf of a person resident outside Sri Lanka, that is the USA foreign investor, against the funds lying in the credit of his inward investment account of the said investor in connection with the purchase of shares. Company listed in the, now see, Colombo Stock Exchange is asking the guarantee because they are going to buy shares on behalf of the investor. So they want a guarantee. After buying the shares, if he doesn't pay, the Colombo Stock Exchange is out of money. So they want, when the foreign investor want to invest in Colombo Stock Exchange, he has to send the money. So they are buying the shares thinking that he will pay. In the event he doesn't pay, they want the bank guarantee. That is the reason they are taking a bank guarantee. So you can see the underlying transaction, the foreign investor making investment in shares. Until he makes the payment, the Colombo Stock Exchange is out of funds. Until he has a time to settle it. So when the shares are bought, if the investor doesn't have money, Colombo Stock Exchange has to pocket out. Instead, they want the bank guarantee, so that the bank guarantee will be issued by out of the IIA funds. Eventually, they get the money. So that is what. So in essence, you know the importance of guarantee now, right? So without the guarantee, none of this transaction could take place, right? Corporate guarantee. What is this corporate guarantee? In the event where a company incorporated in Sri Lanka, sometimes corporate guarantee means the company on its own can issue a guarantee without the support of the bank. Say Dialog. Dialog is one of the reputed company. So Dialog want to do some businesses in Vietnam, and they have office. They want to do Vietnam. They want to do some business in Vietnam, right? Dialog has a investment in Vietnam. Now, Dialog had made some investment in Vietnam, and the Vietnam invested company want to take some facility, right? But Dialog, here the investor, Dialog says, okay, we are giving a corporate guarantee. Instead of bank guarantee, we are giving a corporate guarantee. They can give up to 1 million, right? Up to 1 million, they can give a corporate guarantee. Again, it's proportionate to the shares. How much? Now, when I say Dialog having a business in Vietnam, it is not fully owned 100%, maybe 40% Dialog, 60% is a Vietnam company. So Dialog has invested 40% of the shares. So always remember, when you say percentage, means it is a share investment. If the capital is 100, 60 invested by the Vietnam company, 40 invested by Dialog, right? Now Dialog wanted to give some bank guarantee. Instead of going to bank and take up a facility, Dialog is a reputed company. So the Vietnam bank can take the Dialog own guarantee as a security. So the Dialog can issue their own guarantee, corporate guarantee, in favoring the Vietnam bank to lend it to the Vietnam business, where Dialog has a 40%, Vietnam has a 60%. That particular ABC, let's say put ABC company. So the ABC company in Vietnam is owned by the ABC original 60% and Dialog holding 40%. So ABC company want to raise some financial facility in the Vietnam, they want a bank guarantee. So they're asking Dialog also to support. Dialog can go to the bank and take a bank guarantee up to 40% of the shareholding. Instead of that, they are saying, okay, we have a reputed name. Can they take our guarantee? It's a direct corporate guarantee issued by Dialog to Vietnam Bank. That is what you call corporate guarantee. So in the event where the company incorporated in Sri Lanka, investor, which is Dialog, is required to provide a corporate guarantee on behalf of a company incorporated outside Sri Lanka, which is the ABC company in Vietnam, in which the Dialog as the shareholder to enable the Vietnam company to raise facility from a bank, right? A corporate guarantee may be issued subject to a maximum limit of $1 million. Up to $1 million they can go. So the guarantee value shall be proportionate to the percentage. Yeah, if the percentage is 40 and 60, if they are going for a 1 million loan, the corporate guarantee should be 4 million. If they are going for 10 million guarantee, 1 million guarantee, 400,000, 600,000. If they are going for 2 million guarantee, 40% of 2 million, you know how much? It's 800,000, right? So likewise, as per the shareholding, 60-40, I said. The percentage is 60-40. Dialogue holding 40, Vietnam company holding 60. So that whenever the guarantee comes, the proportionate is 60-40. So up to 1 million they can issue, but the proportionate is 60-40, right? So if the facility is for 1 million, 400,000 Dialogue will give, 600,000 Vietnam will give. But limit is 1 million, right? The proportionate or limit. So the board of director, the Dialogue board of director should ensure that Dialogue has enough financial strength, because Dialogue, when they issue the corporate guarantee, remember, if the ABC company in Vietnam default the loan, the Vietnam bank going to claim. When they claim under the corporate guarantee, Dialogue has to pay. So the Dialogue board of directors should aware by it's not giving the bank guarantees. It is giving the bank guarantee. They are committed. They should have a financial strength. They have a contingent liability. I think we learned this contingent liability. We never know until it is realized. As far as the loan is paid by ABC company Vietnam, there's no problem. But in the event ABC is unable to pay, if they default the loan, then that particular Vietnam bank can claim it, because the Dialogue has given a corporate guarantee for their stake of 40%, right? So they have to pay. So there could be claim. Dialogue has to claim. Dialogue has to make the payment. For that, they have to go to the bank to make the payment. Dialogue can't lend the money. Remember. So they have to go to the bank and ask the bank to remit. So central bank has given permission. Okay, Dialogue can give a corporate guarantee. In the event of a claim, they have to go to the authorized dealer to send the money. So that you know, right? They can't send the money directly. Dialogue has to come to the bank to send the money. Okay. Issuing financial guarantee by person resident in Sri Lanka in favor of a person resident outside Sri Lanka. That is, if a government, you know, say Sri Lankan government want to borrow, right? If the Sri Lankan government want to borrow from foreign lender, authorized dealers are permitted to issue guarantee, right? And also, in respect of current, suppose say there are instances you can issue current transaction. I think if I give you an example, sometime if you look at some car companies, right? Car Mart, all these people are buying cars and selling cars, right? So what happened when the cars are bought by these people? Those cars are serviced by the Car Mart. So take example. We will take example of Benz. Demo is agent, right? So Benz is a German car. So the German cars are imported by LC. You know, importing vehicle to Sri Lanka is currently prohibited. You know, the payment term is LC. You have to open LC to get down a vehicle in Sri Lanka as per the local regulation, right? But remember, Benz spare parts, Benz service related, all that accessories are sent by Benz in Germany to Demo in Sri Lanka, right? The Demo, Diesel Motor Engineering Company, the agent for Benz. So the Demo has to issue bank guarantee favoring the German company every time, because they are sending accessories on a credit basis, right? And when they default, when they don't make the money on time, they will claim it under the bank guarantee. I think we learn the bank guarantee, right? Here it's an example. I'm giving an example for you to better understand, right? Say Demo getting accessories and motor spare parts from German company on credit basis, right? And they are giving 90 days credit period. But that German company appointed Demo as an agent in Sri Lanka. But they are giving a credit period. In the event Demo doesn't pay after 90 days, what is the holding they have? They don't have anything. That is the reason they are asking to issue a bank guarantee on behalf of. They want a bank guarantee from Sri Lankan reputed bank in favoring the German Benz company for $1 million for the spare parts they supply to the Demo. So an authorized dealer is permitted to issue renew bank guarantee, bond standby letter of credit, as the case may be, in respect of current transaction. This is current transaction. accessories, motor spare parts, all are current transaction, right? Importing goods, current transaction, and it can be including capital transaction, subject to direction issued by central bank. So these are permitted. So if a spare parts are bought by Demo from their parent company, which is the Benz Germany, they have to issue a guarantee to Benz favoring Benz for the supply of accessories or all the spare parts. That is possible. If the government want to borrow from foreign lender, they can ask the bank to issue a guarantee. Authorized deal or restricted deal also permitted to make outward interest. So when there is a claim, banks are permitted to make a bank claim. Suppose say there is a claim, the government has defaulted the loan, there is a claim, bank has to make, or Demo has defaulted, bank has to make the Benz Germany is claiming. So bank has to settle the claim by making outward remittance. So these are permitted transaction under guarantees. This is covering current and capital both together, right? Okay. Pledging shares. Sometime if you say, as I told you, now ALIS has invested in Bangladesh. Now the Bangladesh company want to borrow. So they are pledging their shares. They are allowing. So the ALIS says, okay, we have a shares 40% or 50%. You can keep our shares as a security to borrow from the Bangladesh bank. So they are allowing, a central bank allow whenever outward investment are made, the investors to pledge their shares to borrow by the investee company. So if I give you an example, the ALIS is made an investment in Bangladesh. If the Bangladesh bank wanted to lend it to a Bangladesh garment factory, they will lend it. The security is their own shares as a security. So it's up to the policy. A certain country might not take the security as their own shares, right? So if they're willing to take their own shares as a security, as a policy in Sri Lanka, we don't take our own shares of the company as a security, because it is the bad security, because your own shares as a security detrimental. But in the event there are investee countries permitting, then you can pledge your own shares for them to borrow. So you are pledging whatever stake you have in the Bangladesh company, let them pledging their shares as a lien or whatever lien, then they can take a facility from their bank. That also permitted by pledging the share, right? These are permitted for the investors. Right. Now, classes of capital transaction undertaken in Sri Lanka by person resident outside Sri Lanka. This is now inward investment account. You know, inward investment account, foreigners can made investment into Sri Lanka. I think you saw all the investment opportunities, shares, debentures, immobile property, loan to the company, all that is possible. What are the, this is, as per the Foreign Exchange Act, there are certain things banks should look at. That areas I'm just covering here. You know the account, you know what type of investment can be made, but in general provisions, a consideration payable for the permitted investment shall be routed through, yes, any foreign investor want to make an investment into Sri Lanka, it has to come by way of IIA. You know the account, inward investment account, right? All income and any capital proceeds, any investment they made, any income is coming from the investment, or the investment proceeds, the capital proceeds can be remitted outside through the same IIA account where the original investment was made. So as I told you very clearly the last session, whenever foreigner want to make an investment, they have to come through the correct channel, which is IIA account. When they bring the money into IIA account, so that they can take the income, they take the capital gain, they take the investment proceed, everything through the IIA account. So those are the regulation. So when the investment coming in, the investment also can go through the same account, so that the investment will be realized, right? Then you can see there are certain exception given. I told you, I think we learned this in last class. The requirement of routing funds through IIA and IIA of non-resident investor are not mandatory for the following investment. So I told you certain instances, when you are insisting, when Sri Lanka government insisting, every investor, when they want to invest into Sri Lanka, they have to come IIA, right? They might insist, but there are foreign investors, they said, we don't open any account. We don't like to open any account. If you want for us to make investment, We don't open IAA, we can send it to you direct. So that is permitted. I think the last class I told you. So the borrower can open an external commercial borrowing account and the investor can directly send the money without IIA. So likewise, you can, I have given certain examples. So you can see the first one, granting loans with a tenure more than 3 years to companies incorporated in Sri Lanka. I think they will open an external commercial borrowing account. The funds can come into the account. No IIA is required, right? Where the investor is point blankly says, I can't open IIA account, right? But that is only possible when they are lending only. When they want to invest in shares, they can't send the money direct to the company. No, they have to come through IIA. Otherwise, they can't invest. But when they are lending to any borrowing, when they are lending to any companies in Sri Lanka, it can be companies, it can be banks, it can be government, they can directly send the money. Because here, we are at the mercy, we are borrowing. So we need to listen to the lender. Otherwise, he's not never going to lend. When he make an investment, we are giving him a choice. You have to come IIA for you to invest. If he doesn't, right, we don't want his investment. But when we are borrowing, we have to be bit flexible to get that money into the country. That is the reason central bank allow, if the foreign lender investing, he has to open IIA for all investment. But they are given exception. If he giving a loan, he can, without opening IIA, he can remit money from his bank directly to the borrower's account. Or borrower can open an external commercial borrowing account and the money can come to the external commercial borrowing account. That is applicable for the first one, for a company. You can say granting loan to the government of Sri Lanka or state So when the lender granting to government or state on, they can directly giving it to the government, rupee or foreign currency. Or granting loans to commercial bank, licensed specialized bank, leasing company, unit trust, they can lend money to these companies, including unit trust, they can lend money. So you can see the foreign lenders are permitted directly make investment. So you, in an exam, if you get a question, as per the investment permitted in Sri Lanka, foreign investors can make certain investment into Sri Lanka without opening IIA. Give 3 instances. The answers are here. One is granting loans to the companies incorporated in Sri Lanka without IIA. Granting loans to the government and government-related organization. Granting loans to licensed banks and licensed specialized bank, finance company without IIA. Right? All are, even they can invest in unit trust. Even unit trust is, you should know, right? These are permitted. They are without IIA, they can make investment. There are 4 instances. Right. An overseas company registered under the Company Act. Opening of, now see, opening of operating places business in Sri Lanka. Now, as I told you, there are foreign investors who can open, who can make investment into Sri Lanka by way of shares, debenture, unit trust, and also we learn setting up an office, immovable properties, loans. All these are possible. Setting up office means they can invest in a business here in Sri Lanka, right? When they are setting up an office, there are certain limitations. So they can operating a place of business in Sri Lanka, any commercial, trading or industrial activity which are permitted. So they can involve in they can start a business here, commercial. They can start an industry. They can open a trading arm. Everything is possible. They can bring an investment, but there are limitations. There are exclusion. Limitation mean if they are into the local industry, any competition given to local exporters like garment factory, tea rubber exporters, we don't want foreign investors to come and compete with our local exporter. So government doesn't want them to come and invest in those. So those are limitation. So suppose Sri Lanka government want foreigners to come and invest. That doesn't mean they can come and invest in garment factory, because we are also having garment export. It is a conflicting of interest. So you should not allow. Those are limited, right? And mining is that is the asset to the country. You should not allow foreigners to come and invest in mining. We have the coal and so-called crude oil still yet to be explored, but still there are even the gem and those are mining. So those are uh, uh, valuable assets. So that is only locals are permitted, not the foreigners. Then deep sea fishing also limited. Deep sea fishing only Sri Lankan institution can do the deep sea fishing. These are resources, right? So mass communication like radio station, TV station, only local companies are permitted, right? So the foreigners are not permitted into come into that because that can lead to unnecessary issues, right? So therefore they are limited. Exclusion means they can't do pawnbroking business. That is pawning. Pawning are permitted licensed pawners and the banks. Others, coastal fishing they can't do, or they can't do any trading or anything less than $5 million. If they want to do a trading, any office, whatever business they can do under permitted more than 5 million. Less than 5 million also they can't do. These are the exclusion. So foreign investors can have a branch office here. They can open and run a commercial, trading or industrial business. They can open office and do the businesses, right? If they want to do such kind of a businesses, they have to bring minimum investment of 200,000 or equivalent to maintain that office. So they want to register their businesses. In order to register their office, they have to bring 200,000 equivalent through the IIA account. They want to register a business. When they want to register an office or business here to carry out, they have to bring 200,000 as an initial investment to register that business. So remember the limit of 200,000 when the foreigners want to set up an office in Sri Lanka, right? When they want to set up any non-commercial, now look at the word non-commercial, non-trading, non-industrial. It is just a kind of a representative office, just a project office, or maybe regional office. That is not making any profit or anything, just a maintenance, right? So there could be UN office here, just to make the affairs, not to do any businesses. So likewise, there are a lot of foreign offices are here. They are only carrying out certain transactions, not in commercial terms. So that kind of office also can have a branch here, or you may call it as a representative office or liaison office. Then regional office, Asian Development Bank might have a World Bank might have a regional office in Sri Lanka. Those are just a maintenance office, not to any commercial activity. So they can remit some money to look after the cost. So that is the second point. In the case of place of business such as liaison office, representative office, they receive funds required to set up the maintenance. So there is a office, they have to pay rent, they have to pay utility bill. If some watches are, security guards are there, some person are working, their salaries, all that to maintain office. There is no set amount as such, right? So amount required through the IIA account to maintain the office. This is non-profit branch, right? Profit branch is different, right? So you know now both are permitted, right? If it is a profitable venture, commercial, industrial, trade arm, they have to register office by bringing $200,000 through IIA. Here, maintaining just a representative office, they have to bring a certain amount of money, which is required to maintain again through the IIA account. So you know now, inward and outward investment has a lot of sub part of it, which you should know, right? Right. Now we are moving on to borrowing by Sri Lankan student pursuing education outside Sri Lanka. Can the Sri Lanka student can borrow? Yes, they are permitted to borrow. Say Sri Lankan student gone to Australia, gone to Canada, gone to UK to study, they can borrow from the university, they can borrow from the financial institution, they can borrow from their banker, right? Or they can borrow from the educational institution to meet their educational expenses, cost of living. They can borrow. So that is permitted, and the commercial banks are also permitted in the event that loan to be paid by the guardian or parents, even that is permitted. So the government is permitted because they want sometime, if there is a possibility, the student to borrow from there and spend is cheaper than sending money all the way from here and remitting money, because the father has to take a bank loan, he has to pay for the child education. There the child can get a loan at a very concession rate of 0.5%. It's worthwhile to reimburse that amount rather than money is going out of here all the way. So they are giving concession because this is education purposes. So central bank is lenient on this. Central bank giving that privilege to the guardian or parent, let the student borrow. If the student can repay, let him repay. In the event he is unable, as a guardian, you can repay the loan. So that is permitted, right? So you should know as a student, you look at the second point. Any authorized dealer may make outward remittance in respective of lending institution being the servicing repayment loan by parents. Yeah, you can settle the loan. Even the student borrow, the guardian can settle the loan. As far as the loan is, you need to have a documentary evidence. The loan is used for education purposes. Suppose say a guardian coming to you and say, my son has taken a 10,000 AUD, Australian dollar. I want to pay to the bank to settle the loan. Then you can't just remit money. You have to get the documentary evidence. Where is the loan? Where is the which account the loan proceeds credited? Whether your son has paid the course fee. Get all the documentary evidence. So you should know when you are making a payment for somebody borrowed outside Sri Lanka. So you need to be aware of document to be taken. Whether student file is there, whether he has a student visa, whether we have remitted any money earlier for student. Then if there's no records, you need to get more documents. So you need to get the student visa. You need to know whether the course fee have been paid. So university has to recommend, give a confirmation that they have paid so much of course fee up to this particular calendar year, and the bank or the lending institution who lend the loans have to give a confirmation they have lent the $10,000 to the borrower, the student name, all that to be taken, right? What is the outstanding amount? All that document evidence to be taken from the bank statement, loan amount, how much outstanding, then you can remit the money. All up, that is what I have been telling. All current transaction, permitted current transactions are eventually everything is possible as far as you need to prove by the documentary evidence, right? So the borrowing loans also permitted transaction now become. So central bank has permitted students to borrow. Now remember the third point, very interesting point. In the event the aforesaid Sri Lankan citizen obtain suppose say the student gone on student visa. Now he's on a temporary visa, he's applying for PR. Now that loan amount what you have taken, right, and repaid by the guardian, right, after PR, now that amount what is repaid from Sri Lanka converted and repaid the loan will be coming into its allowance. Suppose say a student has gone into Australia, he has taken 25,000 Australian dollar as a loan, right? He has paid 5,000, other 20,000 balance is there. While the loan is being processed, being serviced, he got the PR. Now the date from he got the PR, now he is not a student visa. He got the PR. Now anything going after that date will be deducted from his migration allowance, because he is eligible to take 200,000 migration allowance as per the original direction. Out of which now the 20,000 loan need to be repaid, the student loan. That 20,000 will be deducted from his migration allowance, because he got the visa now PR, not a student anymore. So you understand that? Yeah, that is the point. In the event where the aforesaid Sri Lankan citizen obtain permanent resident visa, a temporary resident visa, even a temporary resident visa, which entitled for the permanent resident in another country or citizenship of another country, including dual, outward remittance in respect of repayment loan shall be subject to eligible migration allowance of such person. Subject to eligible migration allowance. Suppose say 25,000 loan is taken. He has take example, he has paid 15,000. Only 10,000 outstanding. Before you make the 10,000 outstanding, he got the PR. Now after PR, when you are making the 10,000, that 10,000 you can make and settle the loan. But when he comes to claim his migration allowance, you have to remember this 10,000 also to be deducted from his migration allowance. Because after getting the PR, he has already taken 10,000 from the bank to repay the loan. That is after he getting the PR. As a student, if you settle the entire thing, it is not counted from the migration allowance. The moment he has any outstanding loan after getting the PR, if you want to settle the outstanding loan, then it will be deducted from the eligible migration allowance. Is that clear? Right. Okay. Life insurance policies for non-national resident. So there are insurance company can issue life insurance policies in foreign currency for foreign designated policies for non-residents, right? Suppose say there are people who want to issue insurance, non-national want to take an insurance policy in Sri Lanka, they pay insurance premium in foreign currency. That is possible. In the event they pay the premium in foreign currency, after maturity of the life policy, the insurance company can send the money. So central bank allows that to happen because they have sold designated, they are selling designated foreign currency life policy to foreigners and getting the premium in dollars. So when there is a maturity, so that means the insured outlives mean he survived until the maturity period of the life policy. Then the with the bonus or whatever, everything should be sent to the insured. So that money can be sent. So central bank permitting, the money can be sent to the foreign outward remittances to the insured as far as the insurance policy is sold by the local insurance company to foreigner in foreign currency life policy, where the premium also they got the foreign currency. Therefore, the maturity proceeds, if the insured outlives after the maturity period, that can be remittable. So that is also permitted, right? So that you understand, as per the local regulation, that is permitted. There are people who are permitted open, maintain, operate accounts in financial institution outside Sri Lanka. So these people are permitted to open bank account in other country. These are local people. Who are the people, right? Obviously, exporters are permitted to open. That is what most of the exporters, when they try to keep the export proceeds in overseas, central bank brought the regulation. Every exporter has to bring their inward remittances into the country because they can retain the export proceeds for which they can use to buy their import material. So for that purpose, that was given. But there are certain exporters do not bring their export proceeds into the country. So that is the reason central bank brought the recent restriction for them to bring the investment into country within 90 to 180 days maximum, right? You have to bring the investment in export proceeds into the country. So exporters can maintain. A person who holds the permanent anybody got the PR can maintain account in overseas. Dual citizen person resident in or dual citizen mean he can maintain account in other country, he come and stay here, still he can maintain account. Sri Lankan temporary business education. Student, when you are going for medical, student, you can open a bank account. You are permitted to open a bank account. A person resident in Sri Lanka will be at any time prior to the after coming to a resident outside Sri Lanka, and then otherwise Sri Lanka will be into foreign exchange. A person resident in Sri Lanka who has at any time prior or after the act of coming into effect been resident outside Sri Lanka and earned or otherwise acquired foreign exchange outside Sri Lanka, not involved in conversion. So as far as you are not reconverting rupee into dollars, so as far as that is there, you are permitted to open and maintain a bank account in overseas. So whatever the money that you maintain account, you can't convert here and send the money to that account. You have to when you open the account, you have to make sure you have the earnings there for you to expose. So you open a bank account in other country for you to remit money exceptionally for education purposes, right? And you open a bank account for as an exporter, you have to get your export proceeds credited, right? And you have to have earnings there for you to get. If a PR guy, he has to earn for his foreign accounts to be credited. You can't send the money from here to remit the money, right? Okay, an individual company firm registered in Sri Lanka which provide professional service or vocational service. Anybody providing services to overseas can open a bank account in overseas. These all possible. Remember, they should have the capability to go and open account. This is local bank is nothing to do with this. If your central bank permitting local guy to go and open account, so the local bank do not get involved. Either you have to use your competency, your credibility, open account. So if you are exporter, you can open. If you are a non-resident, you can open. If you are a PR, you can open. Or a temporary resident, you can open. As a student, you can open a bank account, right? All that is fine. You can open, right? But the money has to be earned by you, right? Person permitted to open maintain account with regard continue, right? An individual or company or a firm registered in Sri Lanka which has been granted general. Yes, as I told you, when they are borrowing, uh, 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 to invest outside Sri Lanka provider. I told you there is a category of people when they want to borrow, when they want to, I told you there are two exception. One is you can even invest outside Sri Lanka from the borrowed funds. When you are borrowing funds, the local lender might tell you, you need to open a bank account in overseas for us to lend. So the bank who lends the money on behalf of the lender might tell the local borrower to open account. Therefore, the individual or a company or a firm registered in Sri Lanka, they have to open account overseas to get that loan proceeds credited. Thereafter, they can invest, bring the money into the country and make outward investment. I told you exceptionally, currently outward investments are not permitted. But there are two exceptions. For existing outward investment, you can utilize for any mandatory or any regulatory payment. As a fresh investment, you can only make if you can able to borrow from the foreign lender. In this process, if the foreign institution who is lending may require you to open a bank account in their country, so there is a requirement in the foreign lender's country, the borrower has to open an account in their books, then only they can lend. So there is a requirement in the overseas country. So central bank permitting, if you are a firm, if you are an individual, if you want to borrow from overseas, you can open account because nothing harm, no harm, because you are getting money from overseas credited there. Then you can bring the money into the country, right? So that is permitted. A person resident in Sri Lanka who intend to proceed outside Sri Lanka for education country, yeah, as I told you, you need to get the visa. I told you New Zealand there's a requirement before you go to get a visa, grant visa or student visa, you have to open a bank account. Then you need to open account, then your visa will be processed. So you need to open account and send the money for you to get the visa. Then that kind of people also permitted to open, right? Eligible borrow overseas bank finance institution provides such company required to open an account in Sri Lanka. Right. There again, external commercial borrowing. As I told you, foreign lender can send you the money directly to external commercial borrowing account. But there again, foreign lenders country required a local company. If they are borrowing from foreign lender, the local borrower has to open account in their country. Then it's a requirement. Then the central bank has no objection a local company to open a bank account in order to get the foreign lending. So remember, flexibility is always there. Whenever the account can be opened by local people in overseas are all optional where foreign inward remittance are getting creditors. Therefore, central bank has no option, no objection for that because they are borrowing from foreign lender. In order to get the loan funds only, they are opening account. That's fine, right? You are getting the money into the country. Anyway, the money has to come back to the country. Otherwise, you can't repay the loan, right? So you need to know why these are permitted, right? So we are quickly going to look at some of the few accounts that was I think in our learning objective. I told you there are some special accounts. One of the special account is this senior foreign national special account. This is people who are above 55 years, foreigners who are 55 years. Uh, Maybe when they are retirement age, they prefer to come and stay in Sri Lanka. So those people are senior people. You call it as a senior national because those people are above 55 years. So there is a scheme called Sri Lanka My Dream Home Program. There's a immigration department has launched a program called Sri Lanka My Dream Home Program. That means a foreigner after his retirement life more than 55 years, because in foreign country you can work 60, 65, 70. Anybody more than 55 years are entitled to open this account. The requirement you should be 55 above. So if your age is above 55, 60 or 65, you want to open senior foreign national. Why this account is permitted? Because they can open an account, keep a certain amount of money in the account, and they can get the visa to stay here. So they only has to bring $15,000 and above and keeping it in a foreign currency account. So they will be allowed to stay in Sri Lanka. And the 15,000 has to be a fixed deposit. As far as the money in the FD, without paying any migration fee, you can remain in Sri Lanka forever. As far as the 15,000 is plus, you have to bring your maintenance cost from overseas. So obviously, he will bring, right? If a foreigner, say a rich person, after his retirement, he prefer Sri Lanka weather. Now he can't say he get the benefit, but he prefer to stay in Sri Lanka. So he found a property. So he want to stay there, a rented house or whatever. So he pay a rent, and he doesn't get the visa extra fee because he's a foreigner. He's on a resident visa, and special privilege is given for the senior people. Keeping the $15,000, they can remain here until the amount is lying in the account. So there are two type of accounts are open. One is senior foreign national fixed deposit account, where you have to keep the $15,000. Then senior foreign national rupee account, where you have to bring your money to keep your day-to-day expenses to cover. So simple. There are two accounts to be open. So if you look at, yes, the senior foreign national foreign deposit account should have $15,000 equivalent as a fixed deposit. So that should be remain there as long as that money is remain. It can be remain in Sri Lanka under resident visa. So if a foreigner comes and open an account for $15,000, then the immigration department will give a resident visa until the $15,000 with the bank, right? Then there is a rupee account. Senior foreign national rupee account will be open, kind of a current account type. They will open, and he has to bring $1,500 to meet his cost of living. And if you bring his spouse and dependent, each spouse and dependent, he has to bring $700. So say husband and wife, a child. If the husband and wife only coming, so the husband can bring $15,000, open a senior foreign citizen account, and he remain there. And he bring his wife. So he has to look after the wife expenses. So he get $1,500 for his cost of living, other $750 is spouse or dependent. So that need to be maintained on a monthly basis, on a monthly remittance. These are monthly remittance, $1,500 and $750 on a monthly remittance to cover the expenses. They have to bring that. So these special accounts are only open for that purpose. These two accounts are open for only for that purpose, right? So those are simple accounts. There are few accounts. These are not highly used, because these are very specific, very limited people can open. Above 55 years, and first of all, they have to willing to come here. Then only this account is coming into force. That is the reason these accounts are not spoken frequently. But you should know there is an account like this, right? That is what we learn. Special account called senior foreign national special account. That is above 55 years. You should remember the name. My Dream Home program. Above 55 years, they have to bring $15,000. That's all. Simply you remember. Keep it in FD and bring $1,500 and $750 for a dependent per person to meet their living here. As far as the $15,000 there, they can remain with the resident visa. Simple as that. Then you have a resident guest scheme special account. What do you mean by resident guest scheme special account? This is to introduce Sri Lanka, encourage potential foreign investor. Now see, when Sri Lankans are think of when a country situation is not good, Sri Lankan people want to migrate. There is one way of migration. When you look at the website, Canada, Australia, they will say business visa or investment visa. If you want to invest in $1 million in other country, you can get a visa to go and stay there. So likewise, if a foreigner wanted to come to Sri Lanka, there is a resident guest scheme special account, where resident guest scheme special accounts are introduced by Sri Lanka government to encourage potential foreign investment coming into the country. So those people can bring investment into the country and they can remain here as a guest. So they have to bring investment of there is an account called resident guest foreign currency account. Then there are other two type of account: resident guest rupee account, rupee current account for an investor and professional. There are two categories: investor, people who bring money; a professional, anybody who can come and stay as a professional, say doctor, a lawyer. These people are profession. They can come and serve here as a doctor. As far as they can bring what is required minimum amount, they can stay. As a business person, you have to bring minimum of $250,000, large sum you have to bring. Shall be open a fixed deposit account, investor, a minimum of initial deposit $250,000 he has to bring, and he has to make an investment in Sri Lanka. If he make an investment in Sri Lanka, he can remain here because he comes here to make investment. So if you are making investment, they will be given a resident visa to stay. But in addition, they have to bring $35,000 minimum, probably per annum, $35,000 to maintain their cost of living, to maintain their residential status. So if they are bringing any dependent, each dependent, including spouse, sometimes foreign rich person can come and stay here with his spouse. So they have to open a resident guest scheme and open a 250,000. He brought the money and he want to invest. Then he keep the money in the FD. Banks will pay interest up to 2 years. Remember, the 250,000 fixed deposit, banks generally pay 2 years interest they will pay. After that, the investor is expected to invest in whatever the permitted investment they have to invest. They can't keep the money forever and enjoy that interest and remain here. No, within 2 years they have to make the investment. So they are given 2 years to select the potential investment. If not, they have to take the money and go, right? So up to 2 years they have been given permission to keep the money, enjoy the interest, while bring separately to cover their cost of living. That is called resident guest scheme investors. There is something called professional. Professional person can bring money. There is no 250,000 required. The professional can bring, open, maintain a current account with a minimum sum of $2,000 or 1,000 per equivalent on a monthly basis for a dependent. They bring that money, open into a rupee account. They can stay here. So that is foreign professional are invited to give their expertise knowledge to Sri Lanka. Or if the person want to bring investment into Sri Lanka, let him bring investment of $250,000. Whatever way, investors are permitted, professionals are permitted. So you can see two categories. These are called resident guest scheme, right? So you can see the investment opportunities. What are the investment opportunities given for 250,000 new ventures approved by Board of Investment in Sri Lanka or the relevant authority? Existing or new companies engage in project. So you can start any existing or new businesses you can start, or you can shares listed in the Colombo Stock Exchange, shares listed in the, you can even buy the shares Colombo Stock Exchange. You can invest and stay here, but you have to bring minimum 250,000. That is called resident guest scheme. So you know anybody more than 55 years, there is a senior national account. Guest scheme, investing foreigners to invest here, and professional. Investor has to make an investment of 250,000 above, and its cost of maintaining $35,000. If a foreign professional can come with a $2,000 and $1,000 for dependents, they can come and stay here with a resident guest scheme. Under that, they can stay in Sri Lanka and contribute to the economy by way of professional, by way of business investment, right? There is another account central bank recently introduced. After March, they introduced this account called Special Foreign Currency Account. This is introduced, this account to be opened by companies incorporated in Sri Lanka having listed shares and debt securities in foreign currency in the Colombo Stock Exchange. This must be sound some unfamiliar to you. So there are certain companies approaching Colombo Stock Exchange. They want to designate their shares in dollar. You know the reason why? Because when you are designated your shares in rupee, the foreign investor, when they are buying shares, they are always subject to exchange rate fluctuation. When they fix their shares in foreign currency, the investors prefer to buy because they know there will be not any exchange rate involved if the shares are listed in foreign exchange, right? So Colombo Stock Exchange permitted as a special case for certain companies to list their stocks in dollars and their debentures in foreign currency, not dollars, foreign currency. It can be dollar, it can be any other currency. It is designated foreign currency. So in Colombo Stock Exchange, these companies can list their stocks, shares and debenture in foreign currency. Those companies can open a special account in order to get the investment money into the special account. So those people are permitted to open a special type of account, right? This account is maintained on behalf of a company incorporated in Sri Lanka whose shares and debt securities are designated in foreign currency at the Colombo Stock Exchange. So their shares are traded in dollars for the foreign investor, not to the local people. Local people trading in rupees, shares are traded. This is to attract the foreign investor. Certain company shares are designated, just shares are designated in foreign currency. Therefore, they are permitted to open a special foreign currency account, right? So the eligible person should open only SFC as a sole account, only one account as a sole account. They can keep a term deposit, maybe open only for the purpose of they can keep a normal savings account. They can even open a term deposit term account, keeping the term money that comes as an investment, take a loan facility in rupee. So suppose say if I give you an example, let's say Dialog has converted their share into dollars for a foreign investors to attract. Let's say Dialog shares is traded at the $5 per share. I'm just giving an example, right? Let's say $2 per share. Dialog shares are traded at $2 per share. That's about 500 rupees. $2 per share. Now foreign investors can buy the shares. They can send the money. So the Dialog will have a special foreign currency account open to get the foreign investors' money. So when the foreign investor buying $10,000 worth of shares, if the each share is $2, $20,000 coming in. So the Dialog special foreign currency will have a $20,000. So Dialog can ask the bank, can I give this 20,000 as a fixed deposit, term deposit, against which I'm taking a rupee loan? So the bank will okay. Bank has no problem. Because bank has a dollar amount fixed. They will give a rupee loan. So Dialog has to settle the rupee loan in rupees. But the securities, the fixed deposit came, the fixed amount came as an investment made by the foreign investor through the acquiring Dialog share, which are designated in foreign currency. Say example, right? So AD shall exercise due diligence in carrying out the transaction. So AD has to be careful whether these are rightly maintained, these accounts are okay. So what are the permitted credit to the special foreign currency account? Obviously, foreign investor has to send the money through the IIA account because the foreign investor only buying the Dialog shares. So the transfer of funds from inward investment account of the eligible investor being proceeds of listed. There is no other shortcut here, right? Remember, if you are buying a shares in Colombo Stock Exchange, or if the foreign investor want to buy the investment in Colombo Stock Exchange, shares, debentures, unit trust, not unit trust, Colombo Stock Exchange shares, debentures, they have to come through IIA. Even treasury bill, treasury bond, they have to come IIA. They can't say we can't open IIA, we can send direct. No way. They can't buy shares, they can't buy debentures without IIA. They have to open. It is a must. Otherwise, they can't invest, right? So you should know, foreign investor has to open IIA if they are buying shares, if they are buying debentures, if they are buying treasury bill, if they are buying treasury bond, right? Any other bonds, right? But unit and any other lending, they can directly send money. So that's why exceptionally I showed you, when they are lending to local company, including unit trust, they can directly remit. But shares, preference shares, debentures, treasury bill, treasury bond, they have to come by way of IIA, including immovable property. They have to come by way of IIA, right? Okay. Then remittance of foreign exchange received from outside. So the Dialog can use that money to invest outside Sri Lanka as a current transaction. They can use their transaction, carry out current transaction. Even they can use that money to invest outside. That money can be used capital, because Dialog can maintain a foreign currency. So they will permit a special foreign currency account. That money can be invested outside, and that money can come as a return from the investment they made outside Sri Lanka. That is the second point. Remittance of foreign exchange received outside Sri Lanka in favor of the account holder, favor of the Dialog, through banking system, being any income or capital proceeds derived from capital transaction made outside Sri Lanka. So Dialog can use that money to invest outside Sri Lanka and bring some income into the country through the same account, right? Transfer of earning foreign exchange. So if the Dialog has a business foreign currency account, if they are earning some foreign exchange, they can even transfer from their business foreign currency account, or if they are offshore banking account, to this special foreign currency account. They can get the money transferred. Any interest, what is lying in the money, the interest can be. So these are very limited operations. Permitted debits, yes. Transfer to IIA of the, yeah, you have to send the money back. If you want to send the investors, if the once the shares is sold, when the dialogue if the investor want to sold the shares and want to take the money out, dialogue has to send the money out. So they have to debit their foreign currency account and special foreign currency account, sending it to the IIA of the investors account. They can make the current transaction, as I told you. They can make capital transaction. They have to spend locally in Sri Lanka rupee. So they have to convert and spend locally. So that is all about the foreign currency account. So now we are moving on to the electronic fund transfer card. This for you to just to know the credit card regulation, right? You know the credit card regulation, right? So what is credit card? EFT mean electronic fund transfer card, which consists of electronic fund transfer card, mean card or device that enable you to transfer value credit. It could be credit card, debit card, any stored value. I think travel card is a stored value card. So credit, debit, any stored value card are electronic fund transfer card. These are definition given. Debit card mean payment card that will be used to withdraw cash, execute payment. So you can debit. Credit, it's a line of credit. It's a credit line of credit facility granted by the issuer for you to use that. You know the credit card, right? The difference between debit and credit. Debit, you take the money from your own funds. So your own funds are debited when you pull out the money. Credit is not from your own funds. You have been given a credit line, a credit limit by the bank, within which you are utilizing. But you need to repay the bank for the loan that you are taken, right? Okay, personal nature mean what? What do you mean by personal nature? Anything for the cardholder, spouse, immediate family member means spouse, children, parent. You can spend. That is mean personal nature. For me, I can spend my spouse, my children, my parent, everything in personal nature. Virtual currency, you know, cryptocurrency, all these digital currency, right? Crypto, digital currencies, right? These are called virtual currencies, right? So these are definition given for you to understand, right? So you can see electronic fund transfer card. Authorized dealers are permitted to issue debit and credit card to person in. That means anybody in Sri Lanka. Resident in, so anybody with a resident visa, right? For making payment in foreign exchange to person resident outside Sri Lanka, only in respect of current transaction of personal nature. So you should know from your EFT card, you can't do any business transaction. Remember, very important. A trader, importer, or exporter, they can't do their trade transaction through the EFT card. You can purchase any of your personal commodity by utilizing a personal debit or credit card. No issue. That is what it categorically said. Anything personal nature. So you can see the AD shall ensure EFTC issue to cardholder shall not be used for the following. The credit card or the debit card should not be used to dealing in foreign exchange. Forex trading, buy selling foreign exchange, you can't do. You can't do virtual currency. That means cryptocurrency, virtual currency, digital currency, right? You know that, right? You can't do that by utilizing your credit card. You can't go gambling, betting, gaming, you can't do, right? All unauthorized by using your credit card. You can't do payment for import for commercial quantity. What do you mean by commercial purpose? Now say when you are importing, when you are buying a laptop, you are buying your TV or laptop or your mobile phone, a camera or tab, all are no problem. You can use your debit or credit card and buy from overseas, no problem. But if you are buying a laptop of 25 numbers, the purpose is commercial, then you can't use your credit card to make a payment. You have to use one of the import payment. We learn LC, DP, DA, advance payment, open account. You have to follow one of the methods because that is commercial. You know, commercial mean it is for resell purpose, reselling purpose. So you can't use your credit card, debit card for commercial purpose. So don't ever use for your credit card, debit card when you are importing goods for commercial purpose. Yes, you can use it for your any payment. You can use it. Even use it your credit card to buy your air ticket, buy your college fee, course fee, anything you can make payment. No problem. Those are current, but you can't do any commercial transaction, or you can't do any investment. You can't do any capital transaction by utilizing the credit card or debit card, right? That is prohibited, right? Okay. Debit card, ADR also permitted issue debit card to the following person. Now, debit card means it is issued against your funds. Issued against your funds. If you are PFC holder, if you are any, you can see a person resident in Sri Lanka who have proceeded outside Sri Lanka temporarily for business, education, or medical, you can issue a debit card because they are on current transaction. They are resident. Though on education, they are resident. So resident, you can issue a debit card. They can spend. All current transaction, they can spend. You can issue a debit card to business foreign currency holder, personal foreign currency holder. We learn all these account, diplomatic, foreign diplomatic rupee, IIA, CTRA, area, NRRA, resident guest rupee account, special. All that are resident. You can issue debit card for them, no problem. But when you are issuing credit card, you must remember credit cards are only permitted to certain people. Other than the locals, the foreign citizen who hold diplomatic person or diplomatic identity card issued by. So you need to know anybody with a diplomatic visa, you can even grant a credit card for a diplomatic. Any diplomatic foreigners, you can give a credit card because you can give for them because they are treated as a resident. A person resident outside Sri Lanka only up to limit of 90% of the funds available in the foreign currency account in Sri Lanka of such person held as a collateral. Okay. So what does it mean to you? If a person want a credit card, you can block his foreign currency account up to 90% of the funds available. Limit of 90% of the funds available in the. So if you are giving a limit for 1 million rupee equivalent, you can block his foreign currency account for that amount and issue a credit card. So you need not worry. Up to that amount, you can recover because his foreign currency account is blocked. So exceptional situation, you can block the foreign currency account and give a credit card. Otherwise, against your funds, you can issue only debit card, right? These are exceptional situations. To Sri Lankan who have obtained dual citizenship in Sri Lanka and in other country, while being resident in Sri Lanka, subject to the expenditure incurred, shall be settled through the inward investment. So you can issue a credit card if a dual citizen person is remain in Sri Lanka. He want a credit card. He says, I am in Sri Lanka. Though I have Australian citizen, I am in dual. Last 5 years I am here. I want a credit card. So you can give a credit card. He can spend, and that money, whatever income he generates locally, he can repay, or inward remittances he's getting from foreign pension or whatever, he can repay. So as far as he has some earnings, you can give a credit card. So these are exceptional situations, right? Any payment to a person resident outside, any payment, this is any payment. Any payment to a person resident outside Sri Lanka for any purpose is freely permitted. You can make any payment, but you can't, that 4 payment, you can't make credit card. You know that 4 payment, right? What are the 4 payment you can't make out of the electronic fund transfer card? Commercial purposes, virtual currency, then what else? Virtual currency. Then what are the others you can't make? Any capital nature transaction, right? You can't make a investment, you can't make commercial transaction. So those are prohibited transaction, which we learn. Those 4 category you can't. Other than that, you can make any payment, even to transfer to somebody as a not as investment, any payment. So you should understand any purpose is freely permitted. Mean other than that 4 category. You know the 4 category what we discussed, right? So those 4 category, you are not permitted to remit money for those 4 category, right? Other than that, you can remit if the person PFC holder resident outside Sri Lanka. Look at Look at the wording. If a person resident in Sri Lanka is only permitted to current transaction. But if the person PFC holder resident outside Sri Lanka or IIA account holder or diplomatic foreign currency account holder or even area account holder, they can make any payment out of the credit card other than the four, they are permitted. But generally, those are personal in nature, right? But any amount to anybody you can make payment, right? Not in terms of those four categories. So remember that four category, right? Then any payment to person resident outside Sri Lanka for a current transaction of a person nature is permitted where EFT issued. Any payment to person resident outside Sri Lanka for a current any current transaction for personal nature is permitted to anybody who's holding account here, BFCA, PFCA, any resident here, DRA, NRRA, all that is possible in personal nature. Personal nature, you and me also can make any payment. So we are listed here. Anybody can permit it, right? There is a permitted transaction. This is especially capital transactions are permitted, especially not those four category. Other than the four category, capital transactions are permitted only for two people, PFC holder and BFC holder. There again, currently central bank has put a restriction. I think we learned in the last session, $20,000 from your PFC you can make a capital transaction, or BFCA you can make a capital transaction. So you can make from your credit card or debit card, if it is connected to your BFC or PFC account for capital transaction up to $20,000 currently. Earlier unlimited, now it brought down to $20,000. So in essence, in summarize, electronic fund transfer card can be used for any personal in nature other than the four categories. So we will go through the four category once again. What are those? Dealing in foreign exchange, payment related to virtual currencies, gambling, betting, gaming, or any lottery, anything, import of goods for commercial purposes. So these are prohibited. You can't do capital transaction. These four categories of transaction prohibited. Even credit card you can't do as per the local regulation, right? Right. Now, these are two subjects, right? 20,000 you can make. So the key points to note: AD may issue electronic fund transfer card to companies, institutions, incorporated, registered in Sri Lanka. Now, for a company also, we can issue electronic fund transfer card to the designated employee, a director or a AGM or DGM, by debiting the company account. In the event, the card can be issued on account of the company to the designated person for them to make the correct transaction. Sometimes they can visit official, say Dialogue director gone to Malaysia for official visit. So the Dialogue business account issued a credit card favoring the cardholder as a corporate card for him to spend for the official expenses. Yes, done a business tour. So the business card, the corporate card is given to the director for the official expenses and the current transaction to make payment. So that is also permitted. In the corporate is issued in the name of the corporate, right? So Dialogue, names of the designated employees, say AD Silva is the name. So AD Silva issued as a director of Dialogue. So on behalf of Dialogue, they issued to AD Silva as a corporate card. On behalf of Dialogue, they issued as a corporate card. So when you're migrating, leave Sri Lanka for permanent resident, you are supposed to surrender your credit card and debit card and go when you are migrating, right? When you are migrating, leaving. Unless if the except in the event the EFT is issued for making settlement in foreign exchange against the funds in the, unless the card is attached to BFCA, PFCA, DFCA, all your foreign currency account, you can take your card. If not, If the card is attached to local rupee account, you have to return the card and go when you are migrating. If you are taken the card to your PFC account, then you are permitted to, out of your PFCA card is attached to PFCA, you can permit, you have been allowed to take. If not, you have to return the card and go. These are something you need to know as a banker, right? So you need, bank should know to only banks are where the card holders are using the only using the card only for the permitted transaction. Bank has to have the record. So this is very difficult task to maintain. So bank still has to find a solution. IT is supposed to get this, right? They have to take a due diligence. They have to inform when there is a withdrawal taking place while the card holder is treated as a resident, but the money is pulled out from overseas, very frequently happening. I think this is been observed by when the Sri Lankan person sending the student to overseas, the student is pulling out the money, lot of money frequently, he is funding here. If the overseas frequently take, the bank has to observe it, even bank can block that card, right? So if the unusual amounts are taken, they are misusing the money because they are permitted only to use current transaction, but the amount taken doesn't suffice to prove that's a current transaction. So in that cases, you have to stop the card. You have to block the card. That is the card department responsibility. So you have to have a central location to monitor this. Otherwise, you won't be able to monitor this. So the banks will have a central monitoring mechanism to control this. These are very difficult because these are electronically done. So you need to have a system support to ensure there's no violation taking place, right? Card holder transaction, foreign exchange. Yeah, you have to identify rupee transactions separately, foreign transactions, foreign currency transactions separately, because you need to apply the exchange rate. AD shall not issue supplementary card to person resident. So if the card is issued to resident outside, you should not issue supplementary card, because you don't know knowing the other person's eligibility. If you're a local resident, you can issue a eligibility card. If I am taking a card, I can get a supplement card for my wife because I am a resident. If a bank issue a card for a foreigner, they can't issue a supplementary card for the wife without knowing the status of the residential status of the wife, right? You can't do that. Okay. That ends the presentation. So we have a time to go through some questions, right? ADs are permitted to reconvert Sri Lanka rupee into foreign. Reconvert Sri Lanka rupee into permitted. For the following, identify such instance. To deposit balance funds converted into LKR into PFC account. Can you, once you converted into PFC funds into LKR, can you put the rupee funds again, reconvert and putting into PFCA? Can you do that? Or unspent Sri Lanka rupee of person resident outside Sri Lanka? Can that? Or deposit balance funds converted to LKR? If the BFC holder take the dollar into rupee, can he put the rupee back to BFCA? Or can the IAA do? What is the answer? Can anybody try this question? What is the answer? Is it a 1 or 2 or 3 or 4? As I told you, if a foreigner can come, a resident foreigner mean anybody coming on a temporary resident visa, we call person resident outside Sri Lanka. You know, any foreigner visit to Sri Lanka on a temporary visit is a person outside Sri Lanka. When he converted his dollar to rupee, as I told you, he brought $1,000, converted, he has spent 800,000, he has balanced 200,000. Can he reconvert? Yes, he can. Unspent Sri Lanka rupee of a person resident outside Sri Lanka, the answer is second. Only that time bank can reconvert. This is, remember, reconvert the rupee into dollar. If you convert your PFCA, say I have a PFCA, I have converted $1,000 into rupee. Can I ask my banker to reconvert? No, I can't. BFCA same. Even IIA same. If I ask my banker, I am having IIA, I want to convert into rupee. Once it is converted into IIA, you have to spend into rupee. You can't reconvert. But as a foreigner, I brought with me as $1,000. I spent. I have a residue amount. I can't take rupee and go. I am a non-resident. I am a resident outside Sri Lanka. I can't take rupee and go. So that has to be reconverted. So that is the answer, right? Okay. Question number 2. What is the maximum value of bank guarantee could be issued by AD for a company incorporated in Sri Lanka requires to provide guarantee to enable the branch or project office established outside Sri Lanka by the said investor to raise the facility from the financial. Branch office, what is the amount? A bank guarantee up to 500,000, bank guarantee up to 1 million or its equivalent, a bank guarantee up to the full value of the investment made, bank guarantee value. Bank guarantee value shall be proportionate to the percentage of shareholding of the investor. What is the answer? Look at the question. What is the maximum value of a bank guarantee could be issued by AD, by authorized dealer for a company incorporated in Sri Lanka? Request to provide a guarantee to enable the branch. I told you, Dialog having a project office, project office, or ALIS having a project office in Male. It's fully owned ALIS office in Male. How much the Male office can want to raise funds? How much ALIS can issue bank guarantee as a branch? Answer is first one. Yes, up to 500,000 for a branch. $1 million investment you can make when you have invested in a company where you have the facility not as a branch office. Your branch office is fully owned by you. If you are making investment as a subsidiary company or a company you have less than 50% share, right? So you don't have more than 50%. So it could be you consider it as an associate company, less than 50. If you have more than 50% share, you consider it as a subsidiary. So based on that, you can make an investment less than 50%, 50%, or more than 50% based on your contract, based on your investment that you can issue, but not here. So there is a limit of 1 million subject. So here the answer is it's a branch office. You can up to 500,000 equivalent per branch. So question number 2, EFTC holders are not permitted to use the card. EFTC holders are not permitted to use the card to carry out following transaction. What is that? Payment to purchase goods for personal usage. No, that can be done. Effect payment for education purpose for immediate family member. Yeah, that's a personal nature. Settlement of hospitalization expenses by the card holder. Yes, that can be done. Payment for import of goods Sri Lanka for commercial purpose. No, commercial purpose you can't. So that is the answer. So credit card holders should not permit it. So that is the answer. Question number 4. What is the maximum amount of funds be remitted to Sri Lanka by the parent company overseas through their IIA in case of a place of business such as the liaison office, a representative office, or other similar office registered in Sri Lanka, carrying out any non-commercial, non-trading, or non-industrial? It is just a liaison office or representative office, just to look after the. Now I told you IMS has office, UN has office, World Bank has office. You need to maintain that office. So the parent company has to send some money to maintain that office. What is that amount? A minimum investment in excess 5 million, a minimum of 200,000 equivalent of amount to remit the required funds for the setting up and maintenance of that such place, amount to be decided by the registrar of company. Answer is, the answer, right? When you're non-trading, non-industrial activities, it has to be according to the requirement of the office. It is not 200,000. 200,000 is coming in for the profit-making office. That is for trading arm, industrial, commercial business. Having a branch here, they have to bring 200,000. A minimum investment in excess 5 million you have to bring when you are making a trading as an investment. So the answer is the third one, to remit the required funds to setting up. If it is a liaison office for non-trading, you only required amount to maintain the office. Question number 4. Who is eligible to open special foreign currency account? Who is eligible to open special foreign currency account? Who is eligible? Answer. What is the purpose of opening special? Who is eligible? You know the answer, right? I told you companies incorporated in Sri Lanka. You can write down answer. Companies incorporated in Sri Lanka. Company incorporated in Sri Lanka having having listed shares, companies incorporated in Sri Lanka having listed shares and debt securities, companies incorporated in Sri Lanka having listed shares, stroke, or you can put stroke, uh, debt securities, that is debentures, corporate bond, debt securities denominated in any designated foreign currency. Denominated in any designated foreign currency. Denominated in any designated foreign currency. On Colombo Stock Exchange, on CSE. So I just repeat it again. A company is incorporated in Sri Lanka having shares listed or having listed shares, and or you can put stock, debt securities denominated in any designated foreign currency on the CSE, on the Colombo Stock Exchange, on the CSE. So that is the person eligible. What is the purpose for opening such account? Why that account is required to, you can say, to facilitate foreign currency denominated, to facilitate foreign currency denominated investment, to facilitate foreign currency denominated investment on the CSE, on the Colombo Stock Exchange, to facilitate foreign currency denominated investment on the CSE, on the Colombo Stock Exchange, right? So we are into the last case study. I think we are okay. We can spend 5 minutes extra, right? Okay. There has been an offer letter issued by Kingston University, UK, to a student in Sri Lanka. Carefully listen. I think we study this education. This is totally on education, right? There has been an offer letter issued by Kingston University, UK, to a student in Sri Lanka, indicating the full course fee per annum. Full course fee per annum is GBP 20,000 and cost of living approximately 10,000 per annum. Can the course fee in full is remittable at once? What is the answer? Yes or no? What is the answer? Yes or no? Course fee? Yes. Yes. It could be remitted. It could be remitted. Yes, it could be remitted. Yes. Course fee could be remitted. Yes, it could be remitted. Right. Can the entire cost of living per annum is remittable at once? Can the entire cost of living per annum, that is 10,000, is remittable at once? So actually, there is no need. You actually you can't say no, but there is no need to remit. Cost of living generally recommendation is you need not to remit the cost of living upfront. There is no requirement. So your answer should be bit diplomatic. You have to say there is no need to remit the cost of living. There is no need to remit the cost of living in full. There is no need to remit the cost of living in full as it is only required to be spent semester by semester or a term by term. So you can remit 3 months cost of living once, next 3 months, or you can call it as a term by term or semester by semester or a term by term. There's no necessary for you to remit the entire thing, right? Or even you can divide 2 years and remit. That's okay. If the cost of living is 10,000, you can remit about 3,000 into 3 payments, I would suggest, or 5,000 into 2. That's okay, right? But not at all 10,000. There's no requirement, right? So you need to know that, right? Can the cost of living and the course fee is full? I think there is a typo error. Just correct it, right? Can the cost of living and the course fee in full are remittable? It should be are remittable to the student. Can the cost of living and the course fee in full are, I think the R2 is joined together. In between, there's a word missing. Are remittable to the student overseas. Can you remit cost of living and the course fee in full to the student name? No, it is not possible. No, it is not possible. You have to say no, it is not possible. The course fee needs to be remitted. The course fee needs to be remitted. No, it is not possible. Then you can say the course fee needs to be remitted to the education institution only. The course fee need to be remitted in favor of. The course fee needs to be remitted in favor of the educational institution only or university. Educational institution or university only, or college or whatever you can add it. You can add anything, right? The cost of living, the course fee can only be remitted to the education institution or university only, right? The cost of living, you can say the cost of living. The cost of living can be directly remitted. The cost of living can be directly remitted favoring student. The cost of living can be directly remitted. The cost of living can be directly remitted. The cost of living can be directly remitted in favor of the student, subject to the cost of living can be remitted in favor of the student, subject to semester or term by term, not the entire 10,000. You have to say, the question is asking, can the cost of living and the course fee in full? So you can't say 20,000 cannot be remitted, course fee cannot be. So answer is no, it's not possible. Then you are saying course fee should be remitted to the university, fine. Then the cost of living should be remitted to the student name. Then it is implied, if you say the cost of living can be remitted to student's name, it implies the 10,000 can be remitted. No, you have to say it is permitted, cost of living can be remitted favoring the student subject to term by term. It means not 10,000. It is either divided by 3 or 5 or semester by semester, right? Okay, then the question number, I think there are 5 questions. 4. If the cost of living is not mentioned in the offer letter or confirmation letter, can the bank remit funds to the cost of living? If so, if the cost, I told you sometime when you apply for university, you might say I'm not staying in the hostel premises. So when they issue offer letter, confirmation letter, the cost of living nothing mentioned, only the course fee mentioned. But the guardian want to remit money. So can the bank remit fund? Yes, bank can remit. Answer is yes. Bank can remit the cost of living. Bank can remit the cost of living. It is generally term or semester by semester. It is generally term or semester by semester. It is generally term or semester by semester. Generally term or semester by semester. And the bank should request the guardian. Bank should request the guardian. Bank should request the guardian. Bank should request the guardian to obtain an approximate cost of living, an approximate cost of living from the educational institution overseas. 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 If not, bank need to justify the verification. Bank need to justify the verification. So if they decide to remit 3,000, they need to justify the verification. Justify verification, right? Okay. The last question. Oh, I'm sorry. It says cost of living. How is the amount determined? Yes, that's the answer. Is justified by the. Can the student is permitted to borrow from the bank overseas for its education purpose? Yes. Yes, student is permitted to borrow. Yes, student is permitted to borrow. Yes, student is permitted to borrow. Not only from the bank. Yes, student is permitted to borrow not only from the banks, not only from the bank, not only from the bank, also from, or you can put but also, or you can say also from universities or educational institution, or universities or educational institution, or universities or educational institution, comma, any other financial institution, any other financial institution, any other financial institution. So any other financial institution. Okay. So this, I think this session end our the entire course. So may I take this opportunity for you to I wish you all the success in your whatever the written exam you'll sit for. Just give your comments. How did whether this session was useful to you? Give your actual comment, brief comment, because those comments are required by the presenter. So those comments, valuable comments, making us to make the more effective presentation. Where our shortcomings, just don't hesitate to comment on whatever good or bad. Comment on whatever you learn is good or bad. That is more valuable. So without making much time, all the best for you. Okay, take care.